It's been quite a while since I've done one of these, so I'm drinking some midday coffee and hoping to interact with some of you guys. Maybe get your opinions or whatever. Oh, I've got to turn my YouTube. There we go. Mute myself so I'm not listening to myself talking 8 seconds later. That's a little disconcerting. So what do you guys think? Up, down, sideways? Jake the cake? Brad? Who's Brad? That's okay. Lots of sideways the last few days, huh? So you can kind of see here, the purple little background is a close, and then the teal, slight teal background is an open. That's one, on this type of volume chart, that's one really easy way to see where the closes and opens are. You can see from the overnight here. Oh, right, open, close. And then these lines just project. These big lines, you can see what they are, right? The opening VWAP of the market, the first 30 seconds for the E-mini. It tends to be somewhat significant, right? You can see that's what this little line, this little shaded area is, the first 30 seconds of the open. Jake the cake, no problem. And then this is T plus 2 or 2 days ago close, and then this is the purple one is yesterday's close. It's not really the close; it's actually settlement for the E-mini. So settlement on the E-mini is determined by VWAP of the last 30 seconds of the cash hour close. So in case you guys didn't know that, let's see. Something simple and relevant, right? Again, I'm hoping to interact with you guys. I did not sleep well last night, so I was up early trying to trade this market, not really finding an opportunity that I liked, and then I went back to sleep. Watched the first few hours of the market. I was like, you know what? Screw this. I'm gonna go back to sleep. So then I woke back up around. I'm in California, so I woke up again around 9:50. My kid kissing me all over the place, and I got my tetanus or my Tdap, and then flu shot yesterday. So the tetanus, I think Tdap stands for tetanus, diphtheria, and pertussis, I believe. That one hurts on my left shoulder. That one's just like aching. But the flu shots, no effect. Whatever. I'm fine. So I don't know. Maybe that is what prevented me from sleeping well last night. I was up like all night, just could not fall asleep. So anyway, back having a second big cup of coffee, more like a bowl of coffee. Got those. Got an oversized mug or cup here. Looks more like a bowl. Let's see. Oh, I see more comments, but they're way down there. Let's see if I could scroll this whole screen down so I could see more. Jeez. Let's see if I can read that name. Lydia. Oh, I'm a struggler. Zavarotniuk. Is that right? Lydia Zav. Anyway, I can barely see that chat. I have to scroll down here. Oh, hey, Bearish Bull. Yeah. Thank you for that. Calling my Discord beautiful. Oh, yeah. Hey, I appreciate that, Bearish Bull. I'm glad it helps. I'm always making changes, little improvements. Like recently I made, let's see, what's the easiest part for you guys to view here? What's the biggest? I guess we'll go to the DOM. So it's probably the biggest. So like you notice all these buttons, these are all custom. And then like the backgrounds now are all black, which I like, right? Just going with the black theme. So, but yeah, appreciate that very much. I'm glad you're benefiting from the YouTube videos. At this point, I think the YouTube videos get a little overwhelming for new people to see our chart because it's like I don't know how long the YouTube educational playlist is. I just add to them whenever I make a video, but I'd say it's around like 15 plus, maybe 15 to 20 videos in there, and it's like that's a lot of watch time, right? If you're going to go through and try to learn Sierra chart, but at least it's there, I guess. I don't know. It's better than dealing with the Sierra chart. I don't even want to call him like support, but the Sierra chart support. John on the support board. If you get him as your help, you're lucky because he's helpful, right? And just generally not condescending. So if you get John on Sierra chart support board, it's a pleasant experience. But anybody else, whew, they're not the most helpful. I'll tell you that. More coffee. I think I gotta shut my Oh, you know what, Barish? So check it out. I do still trade TPO. Look at all these levels that I've marked up based on the TPO. I use it. So basically in Sierra chart you can just show you. So here's my TPO chart, right? And then in the where is it? Right here in Advanced Settings 2 tab, the copy chart drawings from chart numbers. It works from other chart books as long as you're in the same instance. So you just find the name of the chart book, and so the name of the chart book in my case is Weekly TPOs, and then number 1 is my E-mini. So this is the E-mini TPO here, and so I'll overlay. You see these pink lines here? That's overlaid from the Weekly TPO chart book E-mini. Anyway, so I've got So you can just kind of see where these levels come from. But I use this every night in my trading too. So this is a weekly TPO. So each one of these profiles is a weekly with the volume profile right next to it. But yeah, I use it a lot in my trading still. This chart here is just, it's a more simplified version, just because I like using volume bars a lot of times. Um, oh, that's interesting. That must have been, so I wasn't up at 40, let's see, 47.7. Oh, that was this morning. That must have been some sort of iceberg down here. That's what it looks like, right? Since this is a volume chart, it's 1,000 volume per bar. That must be some sort of iceberg down there. Let's go look. Here's the footprint. Da, 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 da. Let's see. This is a 5-minute chart. Let's go see if we can find it down here. Oh yeah, yeah, iceberg. So the market never got below 47.70. Interesting. I totally missed that. Yeah. So about 3,400 contracts of ice down here. Cool. Let's change this chart book to point and figure so we can see more of it. Or if this top screen, Tron Wars. I'm using Sierra chart. But let's see. We can do this. We can make the. I don't know how many of you guys are like Nasdaq or E-mini traders, but I can certainly just make this really big for this footprint. So I use like a 49-inch. See, now we see. Oh no, we still don't quite see the open, even with these 5-minute bars. Let's see. We'll go about here. There you go. Let's go take a look at it from the perspective of a point and figure. Point and figure. Oh, I don't know. It's such a slow-moving market. 1-10. Let's see what that does. Loading. I wonder how many days I've got loaded in here. 12, 20. A few weeks. All right, that's better. Gives us a nice view of rotations and stuff. Coming up to what looks like stops up here. 87s. Let's see if we can turn on the DOM. See how these buttons look exactly like what they do? It's really nice. Let's see. I'm in a sim, so we're good. All right. So I would want to short probably up here or something. Maybe let's open up a trade window. Oh, it's ugly. Well, that's what sim looks like. Use attached orders. Oh gosh, this is really bad. There you go. I don't ever trade off the chart up here. I trade off these DOMs down here. But for the purposes of this chart trading, let's see. We've got to use all this, this is a different instance of Sierra chart up here with all these chart books. I keep my DOM chart books completely separated. Probably not keeping up with the chat. Let me see. E-mini here? Okay. Oh, thanks, Perishable. He said my setup's nice. Man, a lot of work on that thing. Let's see. But let me see if I can move this around. Can I? Yeah, I can. I'd want to probably do this. Yeah, we're still probably going to run stops up here. So let's see. Is that better than, let's say if I get filled on both of these, is that risk reward better than 1R? I think so. Let's take a look. So the risk reward tool, and then I select the TC3. So you see that risk reward tool, TC3, which is red. So now we can do this. Hey, if our risk is here, we'll put it like that, and then say our entry's in the middle, towards the top, and then our exit's here. Hey, it's 1.78 Rs to short potentially a little stop run up here. But it's pulling back a little off of this level. Maybe there's more trap longs here, right? So the shorts, maybe today, once we sold off here, right? Because you get this little move, we're going kind of off the open right here. Ho-hum. Let's see. Oh. I'm so not used to trading off of a chart anymore. But you get this move off the open. Let's see here. Up, sideways, going sideways, and then a big flush. So longs who are in this area here. Maybe I should turn on something else real quick. Yes, I realize that's on my screen now. Let's see. Epic Pen. All right, and then we'll turn on. I think it's called pointer focus. There you go. There we go. That's better. Move this off the screen. There we go. Now you can see where my pointer is a little more easily. So anyway, probably we've got this move off the open, and then sort of. I guess you could put some sort of. Right, this is some sort of trend line, and then once we violate it, whoosh, big flush. And you can see not a lot of contracts trading at levels, right? It moved quickly, and then someone stepped in and bought, and that was enough to reverse the market. So anyway, this section here, right here, I guess we could do this and say maybe there's trap longs in here, right? And so that's where we're trading now, right? So longs from here, if they've held, we came up, rejected off that breakdown area, trap longs came all the way down. So maybe the trap longs kind of got flushed through here. So if we break this, let's say if there's shorts who are still holding, maybe there's some stops above. how about we take a little scalp here to the long side, but stops right underneath there, and then play the breakout of the. So you can kind of see how these orders are attaching, or maybe you can't because of the lack of I don't know, the lack of resolution, I guess, on your guys' side, but you can see the connecting. So for me, it's not too hard to kind of see what's going on here. And the colors are slightly different, which I can tell what goes to what. But anyway, let's see if we can get a fill here. Hey, we're filled. Stop just right underneath here. Let's see if we go right now. We're definitely building some volume in this area. Again, this is a point figure 1-10, so yeah, I have no idea how many people are even connected right now. 9. Oh, that's cool. Yeah, so if you guys have questions, feel free to even ask about my setup, or you want to share your setup somehow. Let's see. Oh, how funny is that? Trade Your Plan just posted a video. Yeah, it goes to my Discord. That's right. Anyway. More coffee. Oh, okay. So Bearish Bull asks, so this is how long it takes me to actually get this. It's like, I don't know, it's probably 10 or 12 seconds delay. So Bearish Bull asks, would you have any advice for someone who usually doesn't trade off the DOM? Besides having data that's the full book, are there any strategies one could take to look at the DOM more intricately? I don't know. I mean, as you can see, my DOM is pretty simple. I mean, I don't have the recent bid volume or anything. This is combined pulling and stacking, right? So if someone or a market maker starts to pull the book, I'll just quickly see, hey, they pulled the book, but we can refresh this data, clear pulling, stacking, right? You can see what's happening at the front of the book, just a lot of pulling and stacking. So it's anyway, my DOM is pretty simple, right? I mean, let's see. Yeah, I'll show you that, Ryan. I've got a DOM here, and then right next to it, I have time and sales for that DOM, and then I'm highlighting anything over a certain volume. For the E-mini, I believe it's 25 contracts, right? So I'm able to see when bigger size starts to come into the book. And then additionally, what I'm doing on my time and sales is I combine the records with same price and type. And what that does is it'll accumulate at a tick as long as price is moving one direction. It'll accumulate all the orders at a tick. So like right here, you can see it start to change, right? You see that? Right, moved up to like 108 real quick, right? So that could be, let's see. Yeah, I mean, some people use a really complex DOM, but for me, I think that, hey, are we gonna win here? We're now long. Let's see if it goes and takes our first order here. Bing, win one. Stops right above that yellow line right there. So we might see an explosion to the upside here. You see how they're buying, adding. Uh-oh. Short's gonna get roasted above. So we need to fill what, 87s? And they've built volume now into 86.75, so they're gonna want to get compensation into 87. Watch. But anyway, what I was saying with the DOM is you can make it so complex that you have so many different things, and then you've got to be focused on being more of a DOM trader, because we can only do so many things with our eyes, man. I mean, if your eyes darting all around the screen and oh, can we move our stop to break even? Let's see. Do I even have a break even button? Yes, I do. Bing. There you go. It either goes here or it doesn't. So they're building volume. Hey, there's over 1,000 contracts there, right here. But anyway, back with the DOM. Yeah, it looks like they're going to build it. I think, let's see, EP 100 on the simulator. So they're hitting it. You see this? EP is the expected place in the queue. So it's at 97. So 96 contracts need to transact before this contract fills. So you could see, let's see, what am I at? 87 there? So there's a little bit of size. People are stepping in right there. Anyway, it's probably going to get broken. We're going to go up a little higher. And some sort of explosive move. Let's see, we'll put it even higher. Give this a little bit more room. And we'll get rid of this risk-reward garbage. It's just making it more confusing. I'm going to go close my office doors. I'll be right back. Wow, good exercise, buddy. Give me a hug. I love you. All right. Oh, are we building it? Are we doing it now? There it is. Okay, I'm back. Okay, so yeah, it looks like we're gonna crack that level. So what I was saying with the DOM is you can make it so complicated, and for me it's just execution. Um, as you can see, the DOM has some pretty good vertical space on it, and then if you're entering orders on the DOM, like I am here, I've got this whole setup in my control bar where you have like all the different setups here saved. So like here, you see how easy that is just to move stuff around for me, right? Or this kind of thing where you get in and then it automatically has like a trail stop associated with it, right? Bracket on or off, right? Cancel all orders, flatten, buy market, sell market. Come on. Anyway, like this, enter with two different targets. You see that? So it's like really easy. Centering all the DOMs at once. Let's say prices move like this. So I'm gonna. Oh no, I'm long too now. Anyway, was I able to get out of that one? Yeah. Let's see. Nope, I wasn't. So I moved it up. That's okay. Whatever. And then I got like shortcut keys and stuff like on a Stream Deck to manipulate my orders in the DOM and stuff more quickly, right? So like for example, make sure I'm in this. I could move my stop down or up without touching anything, mouse or whatever, which will do that. Let's see. You notice on the DOM, I'm in this position quantity 2, and then up here, it's quantity 1, even though they're both using sim1. Let's see that, sim1. So Sierra chart, and you're in different instances, treats each instance like a separate trading account in simulation. Now, if this was my real account, then whatever I did on the DOM would show up here, right? So I could trade off the chart with one account. It works nicely. But anyway, this thin purple line is obviously price. So anyway, going back to the DOM, it's easy for me to manipulate my orders, at least I think, because I've got my DOM set up to where it doesn't automatically recenter, right? And so it's not moving around. So when I want to click on a level, this never moves. I mean, price may move, but if I'm like, I want to buy 47.85, price might be moving, but this here is not going to move at all. So it's gonna allow me to buy specifically that level. And then if I, let's say I'm the type of trader where I'm looking for an edge on the E-mini based on what the NASDAQ is doing, right? So I have this set up to where if I hit the space bar, all of these recenter. So I have to manually recenter, but I like that. Or I have this button here. It looks like a DOM with a big recenter line. I could use that too. Now, boom, everything's recentered across the middle of the screen. So now, okay, so my NQ chart, my NQ DOM here is combining 4 ticks. So it's every point. You can see that, right? 86, 85, right? So there's no quarter tick increment. So I can only place orders 1 point apart, okay? I don't mind that because NQ is volatile enough that I don't stress about the 4 ticks, right? So I typically have an 8-point stop on the NASDAQ. So you can see it here, 8-point stop loss, 16-point take profit. So like here I am trying to fill at 79, right? Whatever. Get out of this one. Anyway, so because, I don't know, 2.25 points or so equals 1 point for the E-mini, and I've got this set to 4 ticks, and this is each tick, I can relatively see if the NASDAQ is really outperforming the E-mini just by looking at my DOMs. See? So that's a nice little trick. Right? And then I can see this is oil, this is gold, this is the euro. I can kind of see if, gold's making, or oil's making big moves, or gold is making big moves, right? So gold, kind of risk on, risk off, or it was kind of that back in the day. More coffee. So there's some advantages to having the DOM up. So the DOM is my main instance, right? And oh, we're gonna get that move. Let's do this, because that was my actually make money on the sim. These others are actually enter short positions. But are we getting a short squeeze here? A little bit of volume and then it tapers. Low volume node here. Yeah, I mean, it's such a slow market, but I would expect stops to get run here pretty soon. Let's see if we can get a more advantageous fill here. There you go. Stops up there. Still, it's what, I think we figured out it's what, 1.87, 1.8 Rs or something for a fairly nice, it's a little bit of volume being built up here. But it's such a slow moving market. Everything's happening in slow motion. But just based on the tempo here, we've got like, what, 43 minutes left. I would imagine this starts to get a little momentum into this area. And then maybe even stops above the highs too. So who knows? Maybe it gets stopped out, but that's okay. Decent risk reward with a decent setup. I have to step away here just for a few minutes, I think. But anyway, going back, let's see. Someone asked about sharing drawings on chart books. I'll get back to that in about 3 or 4 minutes. This coffee is working its magic, so I'll be back here in a few minutes. Okay, I'm back. Oh, and I feel so much better. Hey, I'm in a position. Awesome. Someone asks, Lavender 1618, can you share your chart book? No, I don't share chart books. I show people how to build them, but we don't even allow the sharing of chart books within our Discord community. It makes people really lazy. And then what you end up having is a bunch of people sitting around with their hands out going, I just want something without putting any effort into, and then it it leaches into the rest of the community. And plus, if I shared my chart book with anybody, all I'd get for the next month is, how does this work? How does that work? Why doesn't it work on my PC? Well, because I've got so many steady collections and things in different places that it would just be a struggle. So, but anyway, no, I don't share chart books. So at this point, I could get out of this position for almost 1 hour, right? Because here's my entry right here, and oh, I guess I could use this here. Let's see, right? So oh, it doesn't work up here. Oh, that sucks. I tell you what, this does it work down here? Does it work over here? Nope, it just doesn't work at all. That sucks. This thing's just not working. Often this whatever you call it, what's the name of this thing? Epic Pen. It doesn't work. It doesn't work when I've got pointer focus on, so it just sucks. Whatever. Okay, so I have a few things here to talk about. One is a user bearish bull. Yeah, it's a whole thing, man. I've done this for a long time, and I have shared chart books in the past, and it always turns into a. I'm trying to refrain from using, like, it turns into a blank show, and it never turns out well for everybody involved. So if people just put the effort in, watch some of the videos that I have out there about how to build this stuff, and then, if you have questions, come into the Discord and ask. Like, we have so many proficient Sierra chart users in the Discord. I mean, it's incredible, the people that we have in there. Like, they completely blow me away in terms of Sierra chart proficiency. People who know how to create custom studies and all kinds. Like, Zip is in there. That's Atkins Indicators, same person. And he's part of our moderator team. But his stuff is incredible, and his understanding of Sierra chart is like light years ahead of me. But anyway, ask a question in the Sierra chart channel, and you'll likely, if you ask nicely, you'll likely get somebody willing to help you. If you're a bit of a jerk about it and start complaining and whining, we'll just ban you from the Discord, because the Discord doesn't make any money, and it's more of a community thing. It's more of a time suck for everybody too. But trying to create community and keep people who have positive attitudes in there. So if you come in and you're like, help me out with this, and then if you don't get a response as fast as you want, or you don't even get a response if you start complaining about it, then we're just gonna remove you. And like, no questions asked. It's like some moderator will see it and just be like, oh, that person's an entitled jerk, and they'll just remove you. But anyway, somebody had a question. There will be no arguing or anything. It's like, you guys don't pay for anything, so, and it's gonna stay that way. It's gonna stay free. So very much zero tolerance with people promoting YouTube videos, people promoting their vendors, promoting their stuff. People get banned just immediately if they do that. So a lot of times some of the moderators will give guidance on that kind of thing, like, hey, don't do it. And then if there's no response and people don't take their stuff down, bink, they just remove them, which all fine by me. I'm not, like I said, I'm not getting paid off the Discord. Whatever. Anyway, so back to sharing. Let's see, what was it? Who was it? Ryan Kane says, can you show how to share drawings from chart in another chart book? Yeah, sure. So easy peasy, lemon squeezy. I'll kind of reduce this window here like this. Give it this look here. All right. So basically, up here, this row, I don't know if you can see my mouse. These are all chart books, right? And so this larger window is one instance of Sierra chart. It's a sub instance, so that shouldn't really matter to you. Most people have one instance of Sierra chart, and so when you go to, let's say, open a new chart book and then you save it as a name. Well, I save the chart book that has all my footprint charts. I save it as footprints. Okay, so if I want to reference a chart within another chart, basically, you see this next set of rows are all the charts, and so it's this, and so it's actually number one, right? You see that number one? This says number 2, number 3, chart number 3, chart number 4. It's got a description. Okay, so let's say if I want to reference like this uptick downtick chart, if I want to reference the footprint chart with the uptick downtick chart, or let's say I want to reference the opposite way. So all you would do is go into the chart, let's say right click, or go up here to chart settings, but I have it as here in my whatever chart menu. And then, so you go into the chart settings, you go into advanced settings 2, and then right down here, copy chart drawings from chart numbers, right? So you remember the number that we were referencing up here? It's number 1 in the footprint chart. All right, so all you do is you type in the chart book name. So it's from chart book footprints. So yeah, footprints, and then colon, and immediately following that, the chart book number. And so you can even Google, how to copy charts from a different chart book in Sierra chart, and there is documentation on what this format is. But that's what the format is, right? Chart book name, colon, and then chart book number, and that's it. And now this chart here now references this chart book this chart book and the number 1, right? So anything I do here will actually show up in the uptick, downtick chart book. Okay, so let's just show you how that works, right? Put this yellow box, right? And we're saying, hey, if you guys know me, yellow is like my stop color. Usually there's stops, right? That's just how I do it. So there you go. Now it shows up here. And remember my explanation earlier of like that trend line, and then the break off the open. So here's the open, right? Teal, right? Little higher low formation. Oh, and it breaks. Almost looks like a head and shoulders. You would call this a complex head and shoulders, actually, if you're looking at classical charting patterns, because it's got like double shoulders and single head, double shoulders. So it's called a complex. And that's from technical analysis of stock trends. That's where that naming or nomenclature comes from. But so it's a complex head and shoulders. So anyway, you can see we're discussing that, and then saying so this is all ho-hum. People are maybe expecting higher prices, hoping for this trend line to break, but instead of breaking it, right, we have a gap, which you guys have watched my videos. I hope you have watched some of them. We know this is 1, 2, and a gap. It's bearish. Whoosh, breakdown. But anyway, so there were obviously some folks expecting upside movement here. They didn't get it. Instead, came down. Bunch of stops, flushed. So the reason for this short above here is we have longs that are likely in this area that, I mean, we're hoping to digest it. I might even be stopped out now. Let's see. No, not yet. It might go get stops above. The fact that we kind of came in here and haven't digested very much yet, we're still sort of grinding up, means that this trade may not work out, which is fine, but give it some room. Don't know the future. But let's see. Anyway, I think that answers the question about the chart books, I'm hoping. Oh, cool. Right on, Ryan. All right, so let's get rid of some of this garbage. Right, and so then as you delete all this stuff, right, if we go back and look at, more to delete. Right click. Oh, that's interesting. As you delete this stuff, you go back to the footprint. It's no longer there as well, right? So you can delete stuff in the destination chart or the source chart. I think in my footprint chart, I actually referenced the uptick, downtick as well. Let's go into chart settings. I think I do. Because, sometimes you draw like trend lines and stuff on the volume charts and little support resistance. Then you want to come back to the footprint and go like, hey, how is the volume reacting around what I think are important levels? Right? And that's useful because then, you start to build a library of setups. But let's see here. Advanced settings 2. So this chart references the weekly TPO chart book, the daily, it's starting to get going. They're building a little bit of volume. And it does. It references the uptick, downtick number 1, right? So if you build your chart books carefully, you can make it easier on yourself to reference all this stuff. Like weekly TPO 1, right? Chart 1, daily TPO chart 1. So if you build them within the chart books in the exact same order every time, oh, hey, look. A little bit of a taper here, right? Bigger volume, tapering to less, to even less. I think we can add, I think. If I'm wrong, well, oh well. Bing, 4 contracts. I'll be wrong above the highs. Okay, stopped. Anyway, let's see, what else? What I just noticed is that I'm using OBS to stream, and I updated to their latest version. It's been a long time since I've streamed on YouTube, and the OBS software has an automatic like integration with YouTube now, and it actually pops out the YouTube chart, so I can actually close this whole stream and have less window space. That's nice. I like that. So now I can see that this chat screen was actually hidden behind another screen. All right. So am I stopped out? Yeah, there it goes. Beautiful. So stops above the highs. They found the liquidity. Why am I entering here? Like what? What is the reason for entering a breakout? Moving to, what was the prior all-time highs? 47.94. Made in Globex, I believe, up here. No, 47.97. Yeah, maybe it goes and gets it. Maybe. But we've got some interest here. Let's see, what time is it? 12:35? Oh. Yeah. I don't like to trade the last 30 minutes typically, especially the last 10 minutes. I'm not a fan of trading. I don't have a very good track record in the last 10 minutes of trade. My hypothesis is that, yeah, Captain Price, it would be. It would be the Captain Obvious level, wouldn't it? But my hypothesis is that at the close, when the big firms are buying or selling, and you get that MOC, you get sort of the market just making non-technical moves, that it's very, very difficult to use TA on that sort of thing, technical analysis. Or maybe I'm just a bad trader at the close. Maybe somebody else is like, I kill it at the close every day, son. Okay, great. It is volatility. So if you're a scalper and you play these little mean reversion moves, then great. But and if you get on the right side of a move, your risk reward could be decent. But I just like my trading styles that I wait for very, very good setups. So I do a lot of sitting on my hands. And if I don't see a setup, then typically, unless I'm really bored, I don't trade. And that's not the right thing to do, but it's what it is. Bearish Bull says he was always told not to trade it too. Yeah, I mean, it depends. I mean, there are some people that trade the close pretty well, like Mr. Topstep. Um, I mean, he had he was on the floor of the CME, so he saw a different perspective with order flow on the close, and so he has a good feel for it. But it's just been my experience that I'm about a 50% win rate trader on the close with about 1R. So why should I pay my broker commissions, essentially? Have I thought about trading in the crypto? I used to trade crypto a lot. Like 16, 17 hours a day, a lot, every single day. So I don't do that anymore. I don't have time for crypto. Um, See, it's funny here on the DOM. I'm long. I'm long up here, down here, right? Same account. This one's short. This one's long. Anyway, let's just do some kind of move it down up like this or something. Keep the 1R trade intact, and then take off. Let's see, a little bit better than 1R if we get it. Let's take a look. Do I hodl? No, I don't own any crypto anymore. I don't trade it. Like I said, I just don't have time for it, and I'm not a long-term believer in crypto either. Martin Friend says NQ. NQ what? This is NQ right here. So NQ is at the open. Well, I should say VWAP of the first 30 seconds of trading. You see that? See how it rejected off that level? What? What? So who knows? 20 minutes left. Market can do lots of things. Just a little bit of oscillating. I mean, it's still pretty. I mean, we're going up, but it's still a pretty balanced market. So who knows, man? Just depends if Goldman and JP Morgan want to buy. If they want to buy, then new all-time highs. There's not enough liquidity on the book for them. So your TA doesn't mean anything in the last 10 minutes when the larger players are involved. So that's you can look at momentum and just say, hey, they're buying, and then try to go with it, and then maybe it works, maybe it doesn't. So we can put a pin in it. Yeah, I'm overall bullish on these markets. I'll show you here on a daily chart. We'll go to the E-mini, right? So this is my setup. I posted this to Twitter, right? We're in this channel here on the E-mini, and this is sort of like a break. We're breaking out of this huge sort of consolidative area. So this is the upper trend line, and then if you measure from the top of the consolidative area to the bottom, I put 100% on it. You notice how there's a little bit of confluence with that trend line, so 49.81. So I think we're generally bullish, but this is a higher time frame thing. It doesn't affect what I think on the close right here, right now. That's for sure. Hey, let's see if we got a little. Oh, we didn't get any profit taking here. Oh, come on. Oh, there's some ice. You see that right here? 47.90. All right. That's. We're gonna take off these two. They might bust it. If they bust it, it's gonna go further. All right. Let's put a break even on this. Look at me trading the sim like it's a real thing. Hey, might as well have good habits. If we pop off this ice, we're gonna go take out this level here, 94. But if they bust the ice, it's gonna crash through. So we can put target back into volume here, right, where price has been accepted all day long. But this is an iceberg right here at 47.90. And yeah, you can kind of see it on the DOM too, right, when you get to 47.90. Hey, this one has a stop here right underneath that. Look at that. Perfect place for a stop. Martin Friend says, made my day on last little move on NQ. Good job, man. Well done. Love to hear it. You know, this is such a slow market, and we still have 17 minutes left until the close. But if we were like at say 12 minutes left to the close, I'd almost guarantee they bust this ice right here and just crack it. So they want to find what kind of liquidity is underneath there. 600, almost 700 contracts. Yeah, at least you get a quick move down to 87s or something. But being that we're like 16 minutes away from the close, the timing is probably a little better for me to get stopped out here. So, so this sim account will be probably the winning account. Oh yeah, why I made all-time highs. Let's see. There it is right there. Oh wow, cool. I have more screens that you guys aren't seeing right now, so if I click on these screens, I've got it's just not enough space on this this YouTube screen here. Or even so, like this might not be all that clear for you guys with so many screens getting squashed in here. Santa only cared about YM. Oh jeez. So anyway, I've got an hourly chart up here. Typically on the hourly, I do RTH only, and I look for trend lines on that. Like so, you can see here, once we popped it, right, and then this was a level here, and this was a level. So right now, okay, this is the Nasdaq. Let's go look. So like the E-mini. So by the way, this it looks a lot like the daily, but the hourly overlays the daily, right? So you go to the daily. So this is overlaying onto the hourly, right? So anyway, we're in breakout mode. It just depends where do they want to close it into the first of the year. I don't know. Maybe way up here. I have no idea. But we're definitely breaking out of this range. So Squeeze Metrics wins again with his DIX indicator. See, I won't pronounce it. Oh, and stopped out. See, look at this. Look, see how hard it is to be a good trader. All that work, going short, going long, and down 0.5 points minus commissions. So a losing day on this sim. On this one looks good, right? This one we're up 600, but whatever. Still, it's hard to be a winning trader, man. It's where do you take profit? What does it look like when you put it into a Monte Carlo? Your overall strategy. Let's go. All right, this DOM looks good now. So can we move it up? Nah, we'll leave it right here. Let's see. We'll go put a 5-minute chart up, and then we'll maximize the screen. Right? You see my buttons here? Window maximize. It shows the chart being maximized, and then this one, select this. See that? And then this one's like in fourths. Actually does what the window or what the button actually shows. Stuff like that's useful. Waiting for party or failures. 3 minutes left. Yeah, the rebalancing algorithm. Let's see. Gotta open up Thinkorswim. It's open, but geez, I don't even know what screen it's on. It might be on my middle screen. Then I show you guys all kinds of stuff I don't want to show you. So. Let's see if it goes here. 92.50 would be the stop. That would be the top here. We'll see. Let's move this up. What's all-time highs? 90 in Globex. Is it 90? Right up here. 98. Oh shoot! Let's just do it. 700 on the book up there. So if we crack that, that's nothing. That's nothing for the close. 700 contracts. Yeah. So if we crack this eventually, you know what? Let's move the stop down. More into, let's see, if we break 90s, then probably not looking good for a all-time high push into the close. So where's my stop? 91. All right, let's look at 90 and a half. We had an iceberg there at 90. So if we come back and that buyer defends against again passively, and we bounce off of it, then we'll probably likely go for all-time highs into the close. Maybe, I don't know. Again, I'm a 50% win rate trader on the close, so take it with a grain of salt. Yeah, that's my thesis there. We'll just stick with that. If we go up, we'll probably, there you go. There it goes. Yeah. Only went up a few points. Let's see, 96. Did it stop me out? Nope, 90.75. All right. Here they come. Hit them with the 20 lot. Yeah, 350 is the rebalancing. It's the MOC stuff. Yeah, the MOC stuff is like it's pretty hit and miss. You just have to know at 350, um, your stops are likely to get tagged if you're too tight on your position. Let's say your trail is stopping the market. If your stop was tight right here, you would have got taken out. So, there's just a little bit of rebalancing that goes on, a little bit of hedging based on MOC. So you get the big moves. This was a baby move today. Anyway, where did oil settle today? 76.56. So here's settle. Man, these charts are not lined up properly. There we go. Oh, no, see our chart still wants to put a little gap here. Let's do it again. All right, there we go. Got it right this time. So we've been hanging out under settlement on this is a 15-minute footprint chart of oil, CL, hanging out below. It probably stops above this level. Big volume. Interesting. Am I gonna get stopped out on this position? Maybe. Nice little sweep. You can see it here on time and sales, right? 92 to 92.75 instantly. 4 or 500 contracts, something like that. That's why I have it set up this way. You can see the order flow a little bit better. Because essentially, you want to see size. Okay, let's see if they pop the one tick lower. Let's go see if they pop the iceberg here. Is there ice above it now? Yeah, someone was buying above it. 90.25. That's hilarious. Okay, there we go. It's size, 1,400 contracts. But they're going to pop it on the close probably. Let's see. Yeah, they're going to pop it. We'll do this. Quick scalp. And flatten. Done. That would have been a nice quick scalp setup right there. There's some good plays on the close like that. They come around once in a while. Yeah, it makes me wish I was on my real account. Hoo hoo hoo. Yeah, you don't want to use a heat map for the close, my friend. Why? The question is why? Well, because this is where all the large players play, and they're just moving price. Let's see, right into the volume node now. 4 minutes left. We'll put tight stops on that. Are we in? We're in one. Jeez. See a little volume ledge here? These stops are in a decent spot. There you go. Let's see if we come back up to the bottom. See, so there was another big buyer here at 88s. So let's see if all the short-term traders get washed up here. Like, oh no, I bought with the iceberg. Now I'm underwater. I want to get out at break even because I've taken some heat. This is the way noobs do it. Wide stops, narrow profit takers. They're getting washed up here. But whoever bought here is likely buying for a much bigger move. So maybe they don't care about the action today. But the price movement around this area is going to be a bunch of short-term traders. So let's see if we can get above it, run stops, and then this is now significant above here. So let's see. That's the idea. Okay, we're above. There we go. Building volume. Money. I'm using a Denali. CQG is just for routing. Yeah, Captain Price. It's a tough one. Yeah, throw it into throw what you've been doing into like a Monte Carlo simulator and then see how it pans out with whatever accuracy you're trading, and then given that sorry, coffee's making my throat dry, and then given what your accuracy is, throw it in there and take a look at it because the Monte Carlo's going to be a little bit more realistic in terms of randomly distributing wins and losses in different orders. Did it fill? Okay, let's go see. I think this is gonna be a loser. Ugh, that's the worst. Even on sim, I'm competitive. Wah wah wah. All right, see, 14 points. So what is that? 14, 5, 10, 5, 6. So this is up 1,500. This is down 700. So net gain of 7. Oh, POC. Right here. Does everybody like buying on POC? I'm curious. No, yeah. Ding. All right, what settlement? Let's go look at what settlement is. Settlement on the E-mini is 47.8450. The open, right here, 47.8150. That's 30 minutes, the first 30 seconds. VWAP, man, it's all just tight. This is a consolidating market. Look, all these trend lines are all wrong now because it's volume basis. There's no time on this. So anyway, I hope you guys all did well today. So yeah, that's where all the volume. And how much volume transacted here? See, now we're down over here. You guys see it? Oh, it's on the left side of the YouTube. So very low volume right here. You see that? The EST plus 1. That's the settlement. That's actual CME settlement. And 27,000 contracts transacted in the last 30 seconds. It's very low. It's on the low end. So market is closing near highs with a pullback candle. They took profit, and the market's holding up with the low volume close. Bullish. It's bullish. I don't know. Maybe. Chris, yeah, I am highlighting. So here's how I have it set up. I'm combining records with same price and type, and then I'm highlighting volume equal or greater to the 25, and then I have it set to color the row, and then that color row is set in the the global settings graphics. I think it's let's take a look here. Time and sales. There you go. Bid highlight text color, right? Ask highlight text color. You see that? So that's what produces the look that you see here, right there. So easy peasy. And I just do price and volume. That's it. So what that does is just combines every single sale like here at every tick. You see that? How it combines them all. It's not a 27 lot. It's just as it ticks up or down. One lots will even combine here and turn into something where you can see how that moved up, right? To 7. See 4, 5, right? So there you go. 100. But that might have been a whole bunch of. We know it's greater than 25 lots transacted there, as a fairly good-sized order, but we don't know exactly how many different transactions made 100 here, right? Might have been one, might have been. So we don't know that, but that's with order flow, you just want to know what's hitting a level. So I'm able to see an iceberg just based on this, right? Let's say 85.50 turns into 600 pretty quickly, but you're looking at the DOM and there's like nothing, there's no size displayed there. Well, then that's an iceberg, right? So. And then when it's different prices, all back to back, somebody swept the book. Or you can generally assume that, right? So sometimes on Enki, you'll see like a bunch of levels get swept, right? With decent size. And that might play into your trading strategy a little bit about how you view market sweeps. Does it make the market strong or weak or whatever? Here, let me turn this all off. So detach this. Oh, wait, it moved all the way down here. X out. Now we turn off the DOM, or we can just turn off the trading right here. Bink, done. Or turn the DOM back on, whatever. Let's see. I'm going back up through. So Mart and Friends says, why are you not using heat map for the close? And the reason I don't use heat map for the close, and what he's talking about is something like this, right? Something like that. That shows you a heat map, is because prior to the close, when you have size, the price is going to be reactive to that size. And one of two ways: it's going to go towards it, or it's going to pull back from it, or maybe go sideways, and that gives you information too. But at the close, there's a whole lot of size that's just transacted through institutional algorithms, and so the market, for the most part, I don't think that the market cares that much at the close about really big size. If you're a large hedge fund or institution, based on how a price moved and all the fundamental factors, you're either buying or you're selling, and so that size doesn't matter so much. And so what you'll often, it's not really like that today, but what you'll often get is you'll get a bunch of size all around the book on days where the market there's more liquidity on the book. So it matters more to me during before the close. So anyway, market depth, we'll just hide that. It's kind of like the large volume trade indicator too. Let's see, do I even have that in here anymore? I don't think I do. Oh, I do. Okay, there it is. Right, you see at the close. So again, this is making these bubbles or large trades bigger relative to whatever else is on the screen. So at the close, as you can see, as we get into the close, just a bunch of size transacting. So it's kind of the same idea as that at the close, a lot of these indicators become useless. Even your momentum indicators at the close will a lot of times become useless because there's just big institutions buying and selling. So, but if we get this off the screen, this area here before the close, then we can see where folks really bought. Watch. There you go. Let's see. So now all these other things get a little bit. There you go. So like see these? They get so tiny you can't see them, but you get the close stuff off. Boom, now you can see these because it's all relative, right? So there's some size that transacted here off of what was sort of the opening 30 seconds. You see that? Some folks, fairly big size transacted based off of this automatically painted level off the first opening 30 seconds. Passive buyer here, iceberg, so a big order filled, and then we had the iceberg here, but not big size, so it's not like someone was hammering this with big size. They were just hitting it, and then that, whatever it was, 1,000 volume bars, so 1, 2, 3, 4, 5, 6, 7, 8. A lot of volume transacted here. Not all at one level. We know the iceberg was what, 3,600 or something, 3,400, but these are 1,000 volume bars, so around 8,000 contracts right in this little area. When we look at time, it was 7:16:08 to 7:16:54, so less than a minute, 8,000 contracts. That's a lot. Look, opening VWAP, 30 seconds. What transacted at the open on the E-mini right here? First 30 seconds, volume was 6,564 contracts for 30 seconds. So this is almost comparable to the open, right? So lots of interest to buy and sell here. And then price eventually moved back up, tested it again, and then whoosh, right? You can see it tested almost. It's interesting to look at these things, I think, right? If you look at that and then you look at this, right? A little consolidative zone, and then you put like, I don't know, some sort of like that. So just sort of, you can see how as price comes back to this consolidative area, being a bounce. So what was that, 73 up to 75, right? So good for scalpers. And then back into this area, and then whoosh. How long did that take? Let's see. 931.41 to the top, 935.50. A few minutes to get off that level. And it's good to look at things in this way because, if you're looking back, a lot of us are very impatient with our trades. We're like, I get in here, it's going sideways. Nope, I just want to cut it. It's not making the move I want immediately. And we cut it. But looking back in the market, sometimes it's good to look at how long did it take to get from this point if you bought in this area based off of this structure, right? If you bought here right on the yellow line with, say, I don't know, 3 or 4 point stop looking for about the same, 1R, right? Let's look at it. So you're buying 73 and you're stopping 70, okay? Bing. So you're buying there, stopping there, and let's say you're looking for 1R out of the trade. Like, because I win 70% of the time on these kind of trades. So you're like, yeah, 1R is good. How long did that take you when you first got filled? 927 all the way up to where you're talking about 8 or 9 or 10 minutes. So for you scalpers out there, sometimes just being patient and letting time pass if you have a nice structure is quite useful. Anyway, obviously we're looking at this in hindsight. Let's see. Yeah, but at Martin friends, I'm pointing out that they're all the big guys at the close, and they're transacting so quickly, and with a lot of times icebergs that they're not displaying their size, right? So if you're looking at, that's why I was pointing out, like if you have like here we are on the close, and you know what, if it works for you, I can't argue, so whatever. But my logic is they're essentially transacting. So this purple area is the last 30 seconds. This is where settlement's calculated. You see the highlighting in the background? I hope you can see it. On the, yeah, it looks like you guys can probably see it. Anyway, so this is the last 30 seconds. This is where settlement is calculated, and you can just see it's like, okay, you had some big size here in terms of orders per at each whatever tick level. So someone passively bought in this area, but look, I mean, a ton of volume, 27,633 contracts transacted from here to here, and I don't know that using a heat map is actually going to help you here because these big players are just transacting using icebergs and high frequency trading algorithms and stuff like that so quickly that I don't know that there's really any edge. I mean, some of the edge that occurs at the close is like, let's say you're in like this is my opinion, obviously, but let's say you're like looking at some sort of trading range like this, and you're like, okay, it's been blah, 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 then it finally breaks it. Yeah, well, this might actually be a playable move now, right? Here to here. And then maybe you cover out using this as support, right? And hey, look, that's what happened, right? But, I mean, the close is so, if you guys have traded for a while, you guys all see it, right? Sometimes we just get on the close, all TA goes out the window, in my opinion. I mean, oh, look at that. Nice big order there on the NASDAQ here. But sometimes on the close we get this, and then we get this, you know? Or worse, sometimes it goes even higher, right? And sometimes cumulative delta is stupidly negative, and sometimes it's stupidly positive, and it occurs both times. So it's kind of a, I don't know, man. I've been doing this a while, and I'm just not a great closing trader, and I have all kinds of theories about it, what works and what doesn't, and my stats just say I'm a 50% win rate type of trader. So here's settlement, and we're starting to move below settlement. I would want to look for a mean reversion back to settlement. Watch, let's see. So this is a level here, 81.75. Let's see if we get filled. Where's settlement? Settlement is now, the bottom is 84.25. I think we're going to come right back to settlement because it's volume. Let's see, not filled. Chris Gardner says, so these volume bubbles trigger at a volume threshold. It's just a large volume trade indicator. That's all it is. It's not even, the bubbles aren't bid or, it's not, if you're familiar with Sierra chart, just go read about like the large volume trade indicator, and that's all it is just big orders at a single tick level. That's all it is. Big orders filling. So nothing tells me that they're passive ICE when I look at the large volume trade indicator. But if you go to the footprint and you're watching it in real time, right? Maybe there was someone who put a big order here and maybe it filled. And so the large volume trade indicator might show you like, oh, I don't know, something like this, right? A big bubble. But the iceberg that might be there. So you might have a few different, you may have big players stepping in with 100 lots wanting to buy with this passive buyer. Because if you were watching, right, we saw that maybe the iceberg display quantity was something like, it could be 1, it could be 10, it could be 50, right? And so, you know, whoever's playing here, if they display quantity 1, you're really not going to see anything on the DOM, right? And so you might have a 2,000 or whatever, 1,150 total contracts filled with a display quantity of 1. And if people start to notice that, essentially what might happen is, because it's FIFO, you're going to the back of the book on the iceberg, they may want to, you know, increase that to like 15 or 20, right? They may even have an algorithm, Trading Technologies allows you to do this, where, you know, as you fill to say 500 lots, and as price bounces away from that level and comes back, because of the bounce away from that level, the algorithm changes the iceberg, and it goes, yeah, now display quantity 20. Why? Why do you do that? Because you want to improve your queue position, essentially, and you want to fill that 20 before, before adding 20 more to the back of the queue, instead of like, you know, so like 1 might take a lot longer to fill. So it just depends on how they have that algorithm set up. But for us, we're just looking at, oh yeah, okay, there's a lot of, what is bid ice, right? They're taking initiative, and there's a passive buyer here that just keeps refilling on the book. And so we're just noting that, and you know, we note that maybe if it's at an important area, again, this is right near the close. So again, a lot of the games don't matter that we would normally play with an iceberg, but you know, this might fill up here, and then if it was, say, way over here, or to use a better example, what was that, 7 something in the morning? Yeah, it's like down here somewhere. Right here. It's not at the close. So if you have this set up and it's filling, and the market ran from it, right? Because it was a low volume market, right? We traded in this big breakdown from consolidation. Yeah, we traded 21,000 contracts, but then it was consolidation, you know, 6,900 contracts. And then as we broke lower, 1,700, and this is 20,000 here, right? But there was somebody here willing to buy a large amount passively. And so this mattered. If you're a scalper, maybe you do take a long here, right? With a stop, really tight stop, because you're like, well, you know, this isn't it. 47 for whatever reason. 47.70 is an important level. Maybe you're an options spot gamma guy, and you're like, you know, that's a really important level, and this is likely some, you know, market maker having to buy because they sold too many puts or something like that, right? So you know it's likely to produce a bounce or something, and that you know that there's so many options that have to be hedged off here, right? And so you're like, I'm just using an example. I'm not trying to say anything specific that actually is. I'm just using an example to say that the iceberg at this time of day is a lot more relevant than an iceberg at the close, right? So that's all I'm trying to say. Now I look back at the chat. Let's see. Yeah, if you're struggling with that, I never filled on this. Okay, cancel all. If you're struggling with that, you can look at something right like this. Let's see here. Have we had any real ice here? Let's see. After the close, hard to tell. So here's the thing, Chris Gardner. There might be somebody with putting an iceberg right here at 47.85.25 for 30 lots. They want to fill 30 lots. That's still an iceberg. But is it significant? That's the question. Maybe it's not, right? Maybe there's someone who wants to buy 200 lots right here at 47.84.25. They don't care if they hit the ask or they get filled on the bid. So ultimately, what matters is what transacts volume-wise at each level. That's number one. Number two, if there's a significant amount of ice at a level, and so then you have to say, well, what's significant? Well, it's based on relative volume, right? If the volume is extraordinarily high, let's say we're printing 40 and 50,000 contracts per 5 minutes, something like that, and then you have an 800 lot iceberg here, that may not even slow the market down, right? That's just a blink of an eye. And so you may have some sort of volume at price threshold alert version 2.0, right, in Sierra chart, and you have it set to if bid ice is negative, if volume is negative 800 at tick, then throw up this little, I don't know, diamond thing or this little blue iceberg indicator, right? Yeah, that indicator is not taking into account if there's a big order sitting there and it's not an iceberg order, right? Maybe there's 800 lots sitting there visible on the book and that fills, but it goes down, it fills, and then maybe they have an algorithm that as soon as they fill, they buy 6 ticks up the book immediately and then support it with bids, right? Because that's their buy zone and they want to trap everybody that's 6 ticks below a certain threshold, and that firm considers that level to be, say, shorting into the hole, right? And they want to trap retail, so they have an algorithm set up like that. Whoosh, they buy it back up. So your quote-unquote iceberg indicator for Sierra chart will tell you, oh, there was 800 filled for an imbalance of negative 800 there. It may not even be an iceberg. So like a true iceberg indicator would have to take into account what is actually sitting on the bid at the time those orders are filling, right? And right now we don't really have anything like that. That would have to be some sort of custom study. And I don't know enough about bitmap to know, or did I say bitmap? Bookmap. I don't know enough about Bookmap to know whether I do know that they track native icebergs. So the rabbit hole is getting deeper. And so they're able to know whether an iceberg is a native iceberg, but then there's something called a synthetic iceberg where you would have to use some sort of algorithm like I just was describing earlier to know, or some sort of custom computation to know that, hey, there's a lot of volume transacting here at this level and the bid keeps getting refilled at a lower than normal comparative value to what's below it, right? Something like that. Jonathan, I totally agree, but it also depends on the size of your account and what your strategy is. If you're a scalper and you say your strategy involves you have a $5,000 account and your strategy involves taking 2 points of profit, so obviously let's say you're doing 3 or 4 MES or something like that, then for some people they need to, if they have a pretty good win rate and their setups are occurring more than 5 or 10 times a day, that works for them. And then maybe if you have a bigger account, you're playing more contracts, then your risk of ruin is much lower. Again, you got to use a Monte Carlo for this kind of thing, but your risk of ruin would be a lot lower because you have a larger contract or a larger account size. So it really just depends on how big your trading account is, what your strategy is. It gets complicated really fast, but at the end of the day, the rule of thumb is we have to control risk, and we have to not draw down our accounts consecutively by too great a number, because then it gets extraordinarily difficult, both psychologically and from an account growth perspective, to then recover losses by wins that are still typically a percentage of that reduced size account. So, but I for my trading strategy, I agree with you that I would actually rather sit on my hands all day and not make money than get into the market just because I want to play and then lose a shit ton of money. That's what makes trading so difficult. Is we might go to work for 8 or 10 hours and then do all this homework and prep and the markets don't move, and then you're left with, if you try to force trades, you're left with, oh shit, I lost, sorry for the language, I lost money today, right? So regular job, you're almost guaranteed to get paid unless you're in sales or something like that, but trading is hard. I still have some coffee left, but it's cold. So anyway, it was a nice play to take a few ticks and come play it back to settlement, right here, but never filled. So, and then you have to ask yourself on this kind of play, right? If you did get filled, all right, we're picking the long side. Where do you put your stop, right? What's the reason for your stop being where it is? Maybe, all right, the market came up. Oh, let's see if this thing will work here. Nope. Jeez. Forget it. Maybe the market came up here, right? And so your interpretation of where you place your stop is what I'm getting at here. Market came up, consolidate, pull back, and then it broke up, and then never even. So this is a microstructure here. Pull back to the microstructure, then push off of it. So maybe if you're trying to get long here, where do you place your stop? You say under this low because you figure there's trap traders still left over for this low volume crap that's occurring over here that really want to cover. And then the algorithms sense that, and there are big firms wanting to defend the settlement price for where things settle overnight, yada yada yada. All right, so it's what, right here that you have to put your stop under this low maybe, or what was yesterday's, or not yesterday's, but what was T+2. Okay, so let's now look at how this trade pans out. Stop here. Let's say you don't enter on the very bottom tick, right, which is unrealistic. You enter, well, we identified it at 83, right? We tried to get filled, what, 82.75 or 83, never filled. So let's just say we go hit the ask to get into our position. So we're in at 83.50. We're saying I'm going to take profit right into settlement. See, your risk reward is 0.8. Okay, so if this is, let's say, one strategy, and this is a strategy you use all the time after the close, right? Mean revert back to settlement on a fairly sideways day, right? We'll call it the strategy is mean revert settlement on neutral day, right? You plug that into your trading software as a setup, and let's say you're right on this kind of setup with using this. Let's say you're right. I don't know. Let's say you're right 3 out of 4 times. So you have a 75% win rate with 0.8 Rs. Okay, time to open up this Monte Carlo. Okay, we'll put this on this screen. God, there's almost no good way to do this. It's okay, we'll just do it on the screen, whatever. And so we're risking, so we have a $10,000 starting capital account. We're going to risk 1% of the account per trade. The winning percentage, which is what we just talked about, is 75%. And what, we have a 0.8 Rs. Okay, so 0.8 Rs. Is that a winning strategy? That's the question, right? It is. So this is 200 separate simulations. So 200 separate randomized order simulations, right? You can see the account goes from 10,000 to 9,900, and then it keeps dropping. This is the risk percent amount. And then the wins and losses are randomized here. So like loss, win, 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 loss, win, 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 loss, win, loss, loss, win, 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 2 losses, right? And so this is 200 of these with the orders of wins and losses being randomized, right? Being put in different orders. So this column here. And you can see that some accounts with this strategy just go sideways. And so this is 100 trades per sim. So this bottom down here says 100. So, after 25 trades, some people are losing money. But eventually, even the very unlucky ones, after 100 trades, using this strategy with this win rate and 200 simulations, even the most unlucky order of wins and losses is profitable after 100 trades. So it's a very good strategy with the I guess the average being somewhere in here, about $4,000 return or 40% return on your account. The question is that are most of you that good? Can you be that consistent? Or do you have the big wide stop loss down here because you're afraid to lose? And so that you're still you're like, I just don't want to lose, and I'll add if it comes down here. So then you get the occasional really big loser, and that shifts your whole risk reward to something lower, right? Maybe your risk reward is like I don't know, maybe you have like a 75% win rate, but your risk reward now, because of that big occasional loser, is like 0.67, right? In which case, let's go plug that in. It's interesting to look at because the Monte Carlo can really help you to get realistic with your trading strategy. Here, let's see. All right, back to this stupid thing here. So 75% win rate, but you're now at 0.67 because those occasional big losers skew everything. Look, everybody's still profitable, but the most unlucky losers only, $1,000 up after 100 trades. And now the average is somewhere around, I don't know, 2,800 or 900. Okay, but let's say you have like the occasional really big loser, and now you're 75% win rate at your risk reward average 0.55. Now let's see. See that? So for 200 simulations, again, based on randomized distribution of wins and losses, or wins and losses being said differently and more simply, wins and losses being in a different order on some of those simulations. Look, there's some losers, right? 3, 4, 5 losers, and then the mean is down here, some about $1,000. You might be the lucky person that is way up here and making 3,000 on this strategy, but let me just tell you, for every 100 trades, the statistical probability that you're somewhere in the middle or towards the bottom is you're likely going to be one of these people who has an unlucky string of losers at the beginning, and the wins and losses stack up in such a way when you're risking 1% that you're an eventual loser. So anyway, now that I've put you all to sleep talking about Monte Carlo, Yeah, Chris. Chris says, there's an interview with the day trader. See, this is where I'm at. I talk for a while, don't look at the chat so that I don't get myself too off track. Because you know me, I like to go down these little rabbit holes. I think it's more interesting, right? That way. But anyway, Chris says there's an interview with the day trader from a quant coder debating whether day trading was possible. The trader showed 2,000 trades with a 65% win rate with 1.5 Rs, and I immediately thought of your Monte Carlo video. I mean, if somebody's doing that, that's amazing. I mean, that guy should own the market if he's repeating that, right? Because here, let's do it. Let's look at the Monte Carlo. Let's plug it in. 65% win rate with 1.5 Rs. Bing. All right, pull this thing off again. 65% win rate. Oops. 1.5 Rs. Let's see. Uh-oh. Look at that, right? Just after 100 trades, this guy's up on his account 75%. You know, and if you figure you could do 4 of these trades a day or something like that, you know, 4 times 5 is 20. 20 times 5 is 100. So you're talking every 6 weeks. You're up 75% on your account. Put that into a compounding calculator. That's ridiculous. You know, you become a trillionaire really fast, which we know is not realistic because nobody can play that big in the market. But if what that guy is saying is true, he should retire in 5 years or less, or he could if he wants to. So it's very hard to attain that level. It's almost unrealistic, I think. Captain prices, and after a big loss, your recovery time is going to suck. So yeah, the psychological impact of a strategy that, let's say, is a 35% win rate with a 4R average, you're going to have in that kind of strategy, you're going to have like 15 losers in a row sometimes. So what is your mental capacity going to look like after that? So like a lot of people like to there was a professional trader that became enamored with greater than 10R setups only. And he's like, you know, you only have to win. You know, he was assuming non-randomized distribution of wins and losses. It's like, I only got to win like 10% of the time and I'm good, you know. But if you put that into a Monte Carlo, your risk of ruin all of a sudden goes, you have so many losses in a row. Sometimes you get like 20 losses in a row with that kind of trading strategy. Are you going to give up? Probably. Probably going to give up with that kind of trading strategy. We're not robots. But if you have an automated strategy, plug it into a Monte Carlo. And if it's good across different, I guess, volatility in market conditions, and you can always return that, it's like back tested with super high risk reward and a low win rate, then let it go. But you got to let it go for long enough to actually return. You know, the problem is that, and if you read the Market Wizards books, most of the automated market trading strategy market wizard types will tell you that the problem is not that a lot of these systems are not good. It's that a lot of traders say we'll buy a system but then not stick with it for long enough. Because again, random distribution of wins and losses. If you start out having losers, you're going to be discouraged with the account drawdown, right? And that's why risk management is number one in this business, and understanding, you know, how your account may draw down with the randomized order of losses, wins and losses, is so important. The quant coder did not question his stats and argued that his sample size was too small and he ultimately would lose everything. Anyway, it's been a long time since I've done a YouTube live stream. I was hoping you guys would. I do really appreciate Chris and Captain and Jonathan, anybody who, Martin friends, who spoke up a little bit. Money. It makes this stream so much better because I have a difficult time just talking and talking. The moment you think you're smarter than the market won't make it last too long. Oh yeah, absolutely. So this last, not this week, but last week, I had a string of days of like 100% winners. And you know, we have in the Discord like an area for people that consistently contribute, and so we call the access to that area the contributors area. And it's just essentially there are people who all give equally to each other, and we constantly talk about the markets and our failures and our successes and all of that. And one of the things that I think they've all heard me say enough is when I have a string of winners, I get very trepidatious, right? I get a little bit fearful that the loser is right around the corner. And once you have a string of winners for like consecutive days and making a fair number of trades, it changes your psychology. You get a little overconfident too, or you can, right? Because we're not robots, right? We have ego, we have all these other things that are factoring into our trading. And so I'm at the point now where whenever I have a string of winners, I'm like, okay, be very aware of what's going on. That I think I'm Superman now. Don't size up. Just try to continue playing like I've played. Don't size up. Don't abandon my, not abandon, but don't stretch my risk. You know, say greater because I'm on a roll and it's time to hit home runs. Don't do any of that. Just keep trading, and you know, the losers come, fine. That's okay. If I keep winning, fine. But don't don't try to swing for the fences, you know, kind of thing. Because that's when we get to, or at least that's where I get into big trouble. 145. Let's see. Hey, Chris, I really appreciate that, my friend. Yeah, I like doing this, but it's hard when everybody gets quiet because then I don't know what to talk about, right? My plan was not to do any kind of presentation or anything today. It's just to go wherever you guys lead me. So if you guys want to talk about Sierra chart, ask questions. Captain Price is cracking me up. Then yeah, just ask questions, talk about it. I have no problem attempting to help somebody out right here, right now. It's more interesting than the alternative, which is probably walking away for a little bit and getting some lunch. But I'm not hungry yet. I had kind of a late breakfast, so. Oh. And there's now, I don't know what the delay is, but there's got to be some sort of delay here. It's probably significant. Let's see. Oh, cool. Yeah. So the chat window that's next to my DOMs is Thinkorswims. So if you go into Thinkorswim and you go into like global, like the chat rooms and global news, they give you like if you have a Thinkorswim or TD Ameritrade account, they give you like a Benzinga news feed, and you can actually, let's see, you can actually, so here it is, right? It's in the chat rooms. It's the global news, this one right here. And if you stretch it out over here and you click on this little expansion button, you can actually listen to it. You see that? And so you can, for like around FOMC times and stuff like that, you'll actually get the FOMC report before it hits the wires in a lot of cases, or before other services get it, because I think it's run by I think it's Benzinga, or even it might even be Ransquawk or something like that. Anyway, it's quite good. I enjoy it, but I keep it off on slow days where I know that there's not going to be any major planned events. All right, it could be a little distracting and loud, but yeah, it's free. It's kind of cool. It's amazing how many free resources are out there today for traders. It's awesome. Oh yeah, as Chris says, oh, it's about 30 seconds. Yeah, for that delay. So Chris says one thing he has trouble with is determining whether the day is likely to be one of those trend all day types or all day type days, and it usually is why I have a red day on my sim. I mean, that's, if we all knew all the time, then markets would be easy. It's tough. That's why we play with stop losses, right? And we define our risk. And that's why trading is hard, because we don't know these things, right? We may have some setup from a higher time frame like this, right? And I posted this on Twitter before it happened. I was expecting something to happen, but I didn't know that it was going to happen. So let's get that clear. Because of this move and the sentiment associated with it, and then with this powerful move here and this here coming right back up to range, I was expecting us to move higher, right? And so volatility and volume was greatly reduced. And if you just look back at the market, when the market pulls back, it does it on high volume. Look at this. Pull back. High volume, pull back. High volume, pull back. Very high volume, pull back. High volume. And the market rallies on what? Look. Low volume, low volume, low volume. Some high volume pullback days. So this was higher-ish volume. But generally, like you could just, I wish I had my marker tool thing. You know what? Maybe I can use the pointer figure thing. Didn't think about that. Let's see. There it is. Pen. Oh, cool. I think I can. All right. So you can just oh, it doesn't work up here. Look at that. Nope, doesn't work. Yeah, whatever. Spend all my time doing this stupid thing. Okay. Didn't work. If I restarted all of this, then it would all work, but I'm not going to spend that much time doing that. Jack, I'll get to your question in a I'll get you to your question in a second here. Oh, what was I talking about? I don't even remember what I was talking about. Oh, yeah. So markets move up on low volume, right? And so we had all these big volume pullbacks, high DIX, right? If you don't follow squeeze metrics on Twitter, you should learn a little bit about the dark pool index, and it's a really nice indicator. So anyway, very high DIX reading, we pull back, and now here we are breaking above. This is a balance area. Everybody and their mama became bearish here. Oh, the markets are going to fall apart. Repeat of 1987, blah, 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 blah. Breath is bad, right? All these things are indicators for, in a bull market, that you should be looking for the buy, right? When we pull back into 45.24 right here, I would say sentiment was most bearish. You want to know what I was thinking during that time? I'm not trying to furu it up here, but check this out. I was thinking the opposite. I'll show you my Twitter. Here's what I was thinking on Twitter. On that exact level. I was trying to throw hints to folks who would listen. There you go. Right here. December 20th, right here on that low at 45.24. I was tweeting out, when the time comes to buy, you won't want to. Walter Deemer. Because the market was in a state of not really selling off, but everybody was max bullish or max bearish, right? And so, anyway, we had 3 red days in a row and right after, and I was buying here different things. So I bought Tesla on that day below 900. But I was quoting this 3-day rule from Marty Schwartz's book, Pitbull, which is the inspiration for my rule of 3. It says, and I say, anyway, it applies here and now. So I hope. I don't know the future, but, I put my money where my mouth was. And the quote is, so whenever a stock like Microsoft or Intel has a large 3-day move in one direction, you do not want to be buying on the 3rd day or selling on the 3rd day of a down move. That's a sucker play. Usually stocks will have big moves in 3 days. The first day is the smart people, the second, semi-smart, and the 3rd day, the dunces have finally figured it out. This is an important rule. If the stock has a bad news and it sells down by the 3rd day, you might want to start looking to buy it because the bad news probably has been fully discounted. Right? So the idea here is, if we look at the chart, is we have 1, 2, 3, and it's 3 big back-to-back daily candles on volume, right? And everybody is what? They are bearish. We violated this trend line. The overall bigger trend line, gap, right? So we could use rule of 3 theory on that. And then, now we're bouncing. So I always look for little bounce plays after 3 big red days in a row with certain kind of sentiment readings. Because, people are, as human beings, we're all about pattern recognition. And after something happens 2 times, we're like, not really a pattern. But the 3rd time, we're like, ooh, that's a clear pattern, right? And so I think I kind of go back to Marty Schwartz's, the dunces have finally figured it out. We're all dunces sometimes, right? Which is why when you look at, let me move all these chats all around again. There we go. Yeah, Pitbull book. It's a good book. I enjoyed it. Yeah, VIX can always go higher, but buy pullbacks in a bull market, right? Just keep doing it until it fails. Just take a look at the chart. It's healthy and normal to have pullbacks. So the question is, can you define your risk? So if you're buying a pullback here, where's your stop going to be? Right? I always play with stops. So my stop would be if I was buying SPY or the correlate link. I don't like to swing trade futures, but if I was buying the E-mini, my stop would be down somewhere in here, 4,400 or something like that. Right? And then your reward would be number 1. So let's put a risk reward tool on it. So stop right in here, outside the trend line. You're buying here on let's say a max death kind of day where everybody's bearish. Buying where we said I was buying, so right here. That was it, like 24, 25. But okay, let's say we buy a little higher, whatever. Let's not make it too perfect. So at the top of the range, assuming you want to de-risk and scale out, is 1.68. It's very good risk reward to go long on a pullback here with the stop here. Because, if it takes out this swing high here and it starts to take out this area here, and then it's likely going to fall and test the 200, right? And you're now outside of this big channel here. That's a scary look. So you want to get stopped out below, but you don't want it too close because, a lot of times they like to go take it out by 20 points and then reverse it, right? Trigger all the stops. And, that's another look. You can get long off of a reversal. It peaks out. It's like a fake out kind of move. Those are some of the best moves for the long side. So anyway, so there's 1R, right? Not at the top. Let's just say before the top. So that's 1.5 Rs here. And then let's say you want to take out 50% of this move here. That's here. That's 3R. So 3R, 1.5R, 2.25 Rs now on the trade. And then, you leave 1 for the top of the trend line, maybe over here. How long do you want to hold the trade for, right? Now you're talking about 4 Rs to let it run. Hard now, very, very hard to do. Hard to just buy and hold. I bought, I'll be honest here. I bought Tesla. My average was $8.99. I was all out of that thing at 9. Let's see, 9. I'm just trying to remember because I was out like 2 days later, a day or 2 later. I was all out at 9.70, I think. So what? Went all the way up to 1,100? Yeah. I missed a huge part of the move, but it was still a good risk reward trade. So, I'm taking chunks out of it. So it's hard. It's hard to hold, especially when so the better your entry, right? The theory should go, hey, it's a better entry. Hold that thing for a bigger winner. But what often happens for me is the better my entry, the earlier I take profit because I just take profit at a certain risk reward based on, I have a pretty good or a certain win rate associated with that kind of play. So I just take it off the table. But yeah, that's what makes trading hard. Let's see. There was a question, Jacqueline. Oh, Jack says the delay is 33 seconds. Yeah, that's why when I stream all this, because I do this in Discord, there's no delay, and I have in Discord I have 1080p streaming, right? So we pay for the Nitro. So the YouTube actually pays for the Discord Nitro and stuff like that. I don't make much on the YouTube. It's less than $100 a month. So it just pays for all the little things I do, like news streaming, Twitter accounts streaming, different charts and stuff into the Discord. So if you're in the, and then everybody has access to that. I put all that to where everyone has access to the charts and stuff in the Discord. At least I hope it's available to everybody. But the YouTube pays for all that, for all those little bots and stuff that I had to buy for the Discord, and then I just pay monthly for the Nitro, so people have longer posts and stuff. So the YouTube is kind of like helping out the Discord kind of thing. But let's see, what was I talking about here? Let's see. Yeah, so I don't have any delay when I stream in Discord, which is a good reason. And then you guys have a chat, and it's all real time, much better. And then I can actually hear you guys talk at the same time. We can all ask questions. So we do that quite often actually in Discord. But yeah. So anyway, yeah, somebody was saying, do I do market profile? I do market profile. I do weekly charts with the commitments of traders in there in Sierra chart, right? That's that whole bar chart commitments. Just Google bar chart and commitments of traders. They have all. So this is all of that imported. You have to have. It used to be a Quandl account. Quandl was bought out by Nasdaq Data, and so it's still free, but I don't know how much longer it's going to be free with Quandl now being owned by Nasdaq Data something. I don't remember their full name, but yeah, you just get a free API key for the COT, and then you use that API key to plug into the custom study that you have to compile from a thread in Sierra chart. So if you just go search commitments of traders in Sierra chart, you'll find the thread really fast, and you get the commitments of traders in for everything, right? So the Nasdaq, I don't have it in there right now. The oil I don't, and neither do I have it with gold, but I can add it just by going to analysis and adding the study collection with the COT. The problem is that the Nasdaq data services will only allow so many pools per second. So if you have multiple charts, you'll time out. So I can only have it on one chart at a time. Let's see. I know that there was something else. Oh, so Jack says, what do you mostly look for when planning your day? Also, when do you check or replan the day? So I plan the next day after the market close, like right now. So between 2 and 3. So it's 2:04 p.m. for me in California. Halo Wars gameplay says, what is COT? Yeah, so that's why I said take a look at bar chart and commitments of traders and read all about it. They have some really good brief descriptions about what commitments of trader is, all the various reports, and what asset managers are, what leverage funds are, and what other reportable and dealers are. They'll do a much better job than I can explaining it all. So what was I? Let's see. So yeah, I typically will start looking at. Well, I'll look at my TPO charts and see what they're looking like for that day. And I track 4 markets consistently. I track the E-mini, the Nasdaq, oil, and gold. And then there's a buddy of mine that trades the euro more often than I do. And so I kind of track it, but I have like a separate screen and chart for that. It doesn't make. It's in my DOMs right over here, but it doesn't make my my 4-chart Sierra chart sub-instance. It doesn't make the cut. So anyway, so I'll take a look at the weekly, just kind of review, see how time and volume is stacking up, what may be sort of a weak point in the market. Obviously, breakouts are often retested. So, this time and volume is real thin here. So I'll keep that in mind that, hey, if we start breaking down out of this structure here, we're now building a volume node up here up at, 47.93 down to 47.70. Right? And notice today, where was the iceberg? 47.70. So that shouldn't be surprising to you that someone was willing to buy big, essentially right at the lower end of value, just outside of value, right? So, and then, we came back right into the middle. So, I'll be considering things like that. And then I might go down to the daily, take a look at the same structure, right? Use some of the Jim Dalton theories about market profile and shapes. Look at some singles that are unfilled down here. I know I mentioned on Twitter when we broke out of this area that we left behind on the footprint, some really bad structure, just bad structure. And so this area is an area of weakness. Would be surprised to at some point test that before moving higher potentially. But for now, yeah, we're up here either distributing or building consolidation for a move higher. So now, I might look at this as like, oh, this is a little balance area or something like that. Mark it up on my charts. Again, if you look at a weekly profile, right, it shows you the whole P shape that we've got going on. And then everything I do on these charts, right, so anything I mark up, so you can see these big, thick blue lines. I've noticed that we've got gaps here. These are all overlaid onto my lower time frame chart. So whatever work I do here, they're pointed at my lower time frame chart. So like, let's say I go look at the E-mini and I scrunch it. You see all that work I've done for the TPOs are all here. So as we move in on a lower time frame, I've got all these references, and I know that blue lines come from my daily TPO, and my weekly TPO is what, purple? So I know that purple lines, like there's a pink or whatever line, I guess it's more pink than purple. Pink lines come from my weekly TPO chart. So I know that that level is based on a much higher time frame, right, and a higher aggregation of data, right? So I just try to stay organized, and I look at all the levels. I look at where value areas are, where price has not spent a lot of time, and there were maybe some emotional buyers or short covering where price just rips through that area. And so I think about, we come back down to that area, longs are going to want to take profit. They're going to push price right back into that area. So where were shorts wrong short term as price moved up? Well, maybe I want to be a buyer there for a bounce or something like that, right? Right above a volume node where the LVN ends, and there's all that really, really low volume that maybe shorts and breakout traders bought, right? So traders who are wrong. And then there's likely to be some holdout traders, right, at the top of 4,700, right, that are still holding short, maybe bigger institutions or larger hedge funds that we'll want to have to cover when we come back into this area to de-risk a little bit, because maybe they've been holding all week, or large swing traders have been holding all week in this holiday season, and maybe they just want to de-risk a little bit back into this area. They're a little out of position, so maybe I'll put that as a level, as an area that maybe I want to buy, right? So something like that. So I'll look at my daily TPOs, my weekly TPOs, they overlay onto the footprints and the uptick, downtick, and then on this side I have my essentially candlesticks, and so I have my COT weekly chart book that contains the 4 things that I trade. I have my daily chart books that contain the 4 things that I trade, right? The ES, the NQ. So I put Bollinger Bands on these things, right? Gold, all kind of lines. And sometimes I'm a little behind, like here, I'm a little behind on my charting, right? So I'd want to get rid of this. This was relevant a while ago in this area, right? You could scalp it and play off of that trend line because it was here. Like this one, is it still relevant? Probably not, right? Is this still relevant? Yeah, sure. We had a false breakout on gold, right? So it's just ranging, higher. This is a daily chart. Then I have my hourly charts, right, for all the various things, and my hourly charts get overlays for my daily and my weekly, right? So you see how that, I put trend lines. Sometimes I put trend lines on just my hourly charts because a lot of my hourly charts, I like to keep them as RTH only. Why? Because it allows me to, because I'm using an hourly chart, it allows me to see the exact gap from closes. So I have this study on here that shows gaps, right? So there's a gap from here to here, right? So there's a gap here, right? So there's it's just useful because then we get to see gaps and stuff like that. So there's a gap from here, wherever the open was, a little higher. So anyway, these all just overlay onto, again, 5-minute charts, right? See that? So as we come into these levels on a 5-minute chart, I'm able to see, hey, we're into a much higher time frame area, and let's say price is, I don't know, let's just say for argument's sake that price is moving into this gap right here, and we have some sort of bearish setup and we're breaking downside, and the E-mini loves to fake everybody out. So we get some down move intraday and it's consolidating above this gap, and then we get a big sell on light volume, right? And I'm looking at my time and sales, I'm looking at my large volume trade indicators, I'm looking at my footprint, I'm like, geez, there's no volume into this gap, right? And it's a bunch of small, looks like retail traders maybe getting short here. Well, maybe they're getting short into the hole, and then you see whoosh, a big buy here. Well, I'm keeping in mind that, hey, there's a gap here, and we just filled that gap, and now they're aggressively buying it, and maybe it corresponds to a bigger level on the daily, right? Right, and there's, I don't know, some sort of gap, and there's a whole bunch of bodies here, and like there's a big volume node here, and the gap is filling somewhere down in here for the sake of argument, and then whoosh, quickly gets bought up. Well, overlaying from higher time frame charts allows me to use that information from the higher time frame charts to make a faster decision without having to click over to other charts, which is why I kind of overlay everything. So anyway, this is how I do it. I put everything on the charts, and for me, I don't need to write up. There are some people in the Discord that do like journals and do game plans. I think that's great. I probably miss things on some days because I don't write everything out, but most days I have this just all kind of in my mind. I use the same setup every single day. I look at all these charts and I just stay connected with the markets. If I take a few days off, I got to go back and look at the price action from the prior days to try to get an idea of what the rotations look like and who's feeling the heat and who's trapped where. And again, because I'm an intraday player on the futures, I'm looking to compete with trapped traders, right? That's what gives me my greatest edge, is where I think that traders are trapped and that they have to go, buy or sell to get out of their position. And so the market makers tend to hesitate, allow markets to, at inflection points and at areas where traders may be trapped, the market makers tend to sort of lay off the gas pedal a little bit. So, when you see like a loss of momentum or something like that, and it's at a level, a lot of times that's your cue. Oh, hey, we're at a level that we've identified as, was a prior breakout level or structure or something like that. And now we see that price is slowing into that area, and potentially you get reversals off those areas. So those are the areas, personally, those are my best setups, is that I like to counter trend trade those areas. I'm not as much of a breakout trader. I think I took a few breakout trades in front of some of my contributors, and they're like, "Wow, you're taking a breakout trade." I'm like, "Yeah, I take breakout trades," but what's noted is that they were surprised I was even taking a breakout trade. So I guess I don't talk about them a lot, and I just don't trade them as much. So I like to buy areas where people have capitulated, right? Essentially where they've stopped out and where maybe that area holds trap traders as well. So you get the short-term capitulation of traders exiting um, at the least advantageous area where they're stopped, and then you also have maybe an area, that same area is hopefully also an area where usually in the session, prior longs were trapped because of how it broke down, and maybe they're holding underwater. You know this whole thing, right? All of you guys know. Look at your losers. You probably hold them 3 times as long as you hold your winners, right? That's just how traders are, right? You get underwater, you get egotistical, you don't want to admit the loss, and you hold it, and maybe you add to it. And so I count on those people making stupid mistakes like that every single day to try to get out at break even, and I'm trying to compete with them for my entries. And so if I notice that kind of behavior on the book, and again, some of that is experience and knowing what those things look like. I mean, you could write probably a 10,000 page book and not even scratch the surface on what does the market look like under various conditions. Captain Price says, I'm an expert bag holder sometimes. Yes, yes. We all are expert bag holders if we don't follow our stop loss rules, which is, for me, that is the most important thing in my trading is where do I admit I'm wrong and don't change the rules of the game after I've entered. I mean, do I do it sometimes? Yes, only when a new, very good thesis emerges and where I can add, but I will not add and make my position bigger than what my risk should be. So maybe, I'm getting into a small position looking for something, and it's a much bigger level as well on the daily or something like that, and I see some sort of Wyckoff spring potential that sets up. Well, then I might change short term, but I have an exit point that is based on logic and based on risk. That does not change. Captain Price says, I usually know how bad it gets when the time takes too long. Yeah, I mean, you just have to have rules to stop out below a certain level, and you have to take your stop. I would rather try to, sort of get into so let's say I'm looking for 3 to 1 Rs. I'd rather take 2 really tight stops that are, let's say, 0.5 R in a row and be wrong, and then, then just move my risk reward down much wider, and take a big stop out. Like, that's just me. Like, I'm okay with 2 quick little losses, but so oftentimes, so this is what happens for me a lot of times, is when I scale into a position, I get stopped out on some of the position as I scale in. And then if the position starts working in my favor and it starts doing what I do, I get back, I buy pullbacks if it's behaving. But I do stop out on some of my position. And so I'm typically, let's just say I enter a trade, I don't know, let's say this pullback happened and I'm entering a trade here, 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 because let's say I'm buying above this teal line or whatever, and here, and then I'm like, oh, any stop outs, I want to buy those. So if I'm, let's say, using a 3-point stop, 84.50, 81.50 gets stopped out, right? This one doesn't, this one doesn't, this one doesn't, this one doesn't, and this one doesn't if I have a 3-point stop, or maybe it's less than that, maybe this stop gets tighter. But typically what will happen is I'm in a position here, I say 1, 1, 1, 1, 1, you got like whatever, what is that, 6 contracts? My flat to flat is not realized as a loss, but I'm just talking about Sierra charts trade statistics. My flat to flat is not recognized as a loss, but my single position is recognized as a loss. But it's part of a bigger position. As price moves down, you're getting filled, and maybe I only get filled like 5 contracts because it goes no lower. I stop out of that one, but then as it bounces, let's say it goes in my favor and it bounces, I don't know, let's just say we're going like, some of you guys like to use fibs, and you're like, I think this is it, and I'm going to target the 50%, maybe a little bit before that. Use my long tool here, stop serve, I don't know, down into this area. My average is, let's say, right here, and I'm targeting 50%. It's still decent. It's still great, right? I mean, even though you have 1 loser out of 5, because you're, targeting something like this, it's still a great trade because, yeah, you're reducing risk there, but you're following your stop loss rules, and you're getting out at your predefined risk rule. And if you're going to have all your stops down here, right, then you need to position size in here smaller to account for you're going to stop everything here instead of scaling your stops out. I don't mind scaling my stops out and reducing size as I'm wrong and it goes below this level, right? So that's personally how I do it. But some people put a stop, put all their stops right at one level. They're like, man, there's big ice right here, and I'm going to put my stop a few ticks below, and maybe their average is here, and so it looks something like this, right? And it's 2.88 Rs for the same trade, and they think they're more skilled at putting their stop loss, on the other side of market structure. And it's just been my experience that they'll sometimes go run it below. And so the wider the stop loss, the higher probability of success, right? Because you don't get stopped out with market noise. So anyway, it's a 49-inch monitor up here. So it's something like, I don't know, 4480 by 15 or 16 or 1800p or something like that. So it's a big monitor, Jack. So Jack says, if you use steady price overlays for the different COT chart and only have one steady grabbing the data, you can use another one for MQ. I have to think about that one. Yeah, I think I'm too dumb, Jack, to understand how you make that work. Sorry. Jack, if you're part of the Discord, I'd love to see in the Sierra chart channel an explanation of how you make that work without pulling different, let me think about that. Because if you're overlaying, the source still has to be a different, I just don't see how that, I just don't see how you would get around that. Anyway, no more questions? I think we're done then, potentially. I'm waiting for, looks like you won for the asset managers. No, so the COT study, right, includes everything, like the asset, the leverage, the other reportable. So this is one study that includes all these different things. I don't want to open up the study and show you my API key, because then someone's going to use it, undoubtedly. Owen, let's see. Let me put a link here. All my videos have Discord link invites. My YouTube has a Discord invite in the sort of the homepage top right. One of those is a Discord invite. My Twitter has a Discord invite, but I will put one in the chat for you, I hope. Let's see. So if you do join the Discord, just note we have rules and fairly organized. We try to keep it, I don't know, on point and not a lot of garbage in there. So, vendors, if you're listening to this, the Discord has a fair number of, I don't even know, maybe 11 or 1,000 to 1,300 people. I don't really know what the Discord has, but it has enough serious traders in there that once in a while people come in hoping to leverage the Discord for their own fame. They like to link to their YouTube. They want to promote themselves. They'll share their top step trader referrals. All those people get banned, and it's in the rules. So my point is, read the rules so you don't come in there and get banned right away, because it's not meant for all of that. It's just meant for a place to be where traders share analysis and, I don't know, different ideas. I think the Sierra chart channel is pretty popular in there. People share all kinds of setups and screenshots of how they've made spreadsheets and all kinds of things work for themselves, different studies. People are really helpful with each other. Everybody's nice and kind, and they don't act entitled and like jerks. Treat everybody in there like you're meeting them on the street, and they're, they look like Shaquille O'Neal, and they can crush you with their bare hands. Treat people that way, and so then you'll be able to stick around and post. But if you come in there, you start like sharing your P&L, trying to promote yourself, and I don't know, putting down others, and it just turns into a whole bragging. And oh man, you're just gonna some mod is gonna come see that, and they're not even gonna think twice. They're just gonna ban you. And I don't have DMs open on Twitter, right? I don't have DMs open on Discord. So if you make the mistake, we're just not gonna think about you anymore, right? So follow the rules, right? Anyway, it's a cool place, but don't mess up. I've had a few people mess up on accident, and then they emailed me, and I let them back in. But essentially, most people I'm going to ignore if you mess up. There's been people who have, shared links to try to hack other people, and those people are banned. There's been some users in this chat that have been banned in there. So don't do it. Let's see. Yes, sir. All the rules. Yeah, I'm a little long-winded on some of these things. What was I gonna do? Oh, put a. I think it's time for me to eat because I think I'm running out of gas. So here's a Discord invite in the chat. Again, nothing in there is like you don't have to pay for anything. Just follow the ethos of the Discord, which is give and take. That's it. If you take, be appreciative, and try to do your best to share, even if you're a noob. I mean, so sometimes we stream in there, like live in some of the voice channels and stuff. We can share our screens, and we get people in there that come into the voice channels and they don't say anything, and so we will kick them out, and we'll reduce the total number of people in those voice channels to people to a maximum, so that we can all discuss markets and we're all essentially putting out. And putting out includes asking questions. Maybe you're brand new, but if you just kind of sit in there and loiter, and you're like, I just want to be here and take from everybody, but not add emojis, not say, hey, how's it going? I kind of liken it to, I don't know, a group of people have agreed to go to Starbucks, sit at a table, and study something together. And then someone else walks in, sits there, and is just deadpan staring at everybody in the face, not saying anything. It's just uncomfortable. So the whole ethos of the Discord server is like give and take, get involved. I know it's uncomfortable. We have trade journals in there, we have analysis channels, but just get involved. I swear to you, I promise you, nobody will criticize you for sharing something that you might think is stupid. Just again, every channel has descriptions. Just follow the rules. I make it uncomplicated, so that we have a little organization. It's kind of like a big library. Right? We have an educational channel where only certain people are allowed to post videos, and we've got hundreds of videos, links to material where you can learn about order flow and classical charting patterns. And it's not just my stuff in there. It's whatever's good. But there's all kinds of resources in there. Psychology channels, books, recommendation. I mean, there's so much. If people just went into the educational channel and perused it for a little bit and watched a bunch of those videos, you would learn so much, and it's all free. So anyway, thanks, Jose. I appreciate that. I'm reading Jack London here. That's right, Jack. It's not always very clear, and with the COT, you have to recognize that it's a 3-day delay as well, right? So we're getting essentially data from Tuesday, and then we're getting the information or the data presented from the CFTC, right, on Friday at, 6 p.m. Eastern, I believe, or 3 p.m. my time. So it's a delayed thing. So you've got to realize that all that data has been reported for everything up until Tuesday of that week. So there's this lag, delay thing on the chart, and you have to kind of account for that. And then on top of that, you kind of have to ask yourself, so the COT has been really useful to me because we have right here, essentially, we have this trend that was really intact. And then as we got and came out of this level here, right, we could kind of put in, yeah, I guess we'll just put some arrow here, right? You notice we kind of broke down out of it. And so asset managers are essentially probably hedging using futures, right? It's kind of going sideways. And then here, they're now actually hedging, right? It's going downside. And so we have this balance area, and now price is breaking up. And now look where, here, let me use this here. Oh, that's an ugly arrow. Why does that arrow look so ugly? Ooh, this arrow is not updated, the undo chart. See, I have it here. It's much nicer. Just noticed I have the wrong thing in here. And this is the wrong one too. It's a text tool. I'm noticing little things. I made some of these updates last night, so I missed stuff. So it happens when you work late. So anyway, we have this channel. Asset managers right now are underexposed to the market. And look at where we're at. We have this balance. So if they have to buy back in, that could really propel this market up. So that's kind of how you use it. And it's based on context, right? You have to really understand it, right? And you can see dealers here, market making. They're a little longer here. Asset managers are on the wrong side of this. So it's a big move down to here. So I wouldn't be surprised if this starts curling up with this market moving potentially straight up for a little bit. I don't know. It's these last little moves here got everybody in a panic. And then, the backdrop is that interest rates, right? Interest rates and inflation and everything like that. Everybody's trying to time the market right now. Everybody's trying to time a top. And typically what happens is if you get too many people on one side of the trade, the opposite is good. Stephen, yeah, you totally missed it, my friend. It's going to unlist too. So I didn't plan to. I was just hoping for this to be kind of like an impromptu, enjoyable thing for a bored futures trader with this market today. So, and it's been a long time. So it's something different for me to keep my creative juices flowing. And it's good to explain all the things to people who haven't had exposure to all of this stuff, because it allows me to stay sharp on the things that, or to, try to explain some of the things that are complicated for others, and I try to put it in a way that's more simplified. It's that, Richard Feynman, yeah, is the Feynman method of explaining things, right? Put it and simplify everything. So that's what I do here. Is I'm trying to keep myself sharp and make sure that I can hopefully explain things in a simple way that even somebody who hasn't read about something, they would still kind of sort of grasp what I'm saying. So that's useful to me. Anyway, all right, no more questions, no more comments. Maybe I'll jet out here. Maybe. We're at the top of the Bollinger Bands right here. So you see that the Bollinger Bands got a little tight here. Consolidation, they tend to do that. We had a volatility box, I guess we would call it. And now we're breaking out of that. Now we've got some really tight inside days here. So I wonder if we do a little test and then boom, spring. Yeah, thanks for the comments, Jack. I really appreciate it. I'll try what you're suggesting with the COT. Maybe that'll work the way If you do it already, then obviously it works. So I appreciate that tip with the COT. I have so many reference charts already, though. By the way, so many. So what is this right here? This is it's next to the log, or a few over, I should say. I can find the log one fast. Undo chart drawing, properties. It uses button 94 original. Okay. Let's go see what this is. Customize. Again, separate instances. Undo chart drawing. Probably doesn't use button 94 original. Nope. Uses button 94. All right, let's go set that. Button 94 original. There you go. I copied all the bitmaps into each folder, but it obviously doesn't go and set each one. It did the majority of them, but anyway. So this here should look better right now. Bing. Oh yeah, much better. What was the other one that was really ugly? Where is it? Is it the text? Yeah, that's it. All right, let's find it. I'm looking at the chat here too. Log, text tool. The text tool actually looks better not using an image and then just using text, calling it text. Color is that. I think that will do it. Bing. That looks good. So do I have it down here as well? Yes, I do. Oh, I did the text one down here. That is so weird. All right, customize this one on the DOM. And I like actually having different buttons for different controls. So like you notice up here, I don't have all these study collections because these study collections, I don't want them on this chart. All right, so this is a different control bar. These two use the same, but this uses it different. And then some of these buttons in here are actually sized slightly differently for the DOM than they are up here. So it's just the whole thing, like some of these and stuff. Yeah. Let's see. What was I doing? I was doing the undo chart drawing, and it's got to be button 94 original, huh? Okay. Button 94 original. Boom. Okay. Yay, it looks much better. Okay, that's good. You can use the reference inside of the same chart, so you don't... Oh, sheesh. Thanks, Jack. I appreciate that. What a guy. All right, Owen. Have a good one, my friend. What else do we have going on here? Yeah, I think we're all done. I'm not going to do my e-mini charting, but sometimes what I'll do is if you guys are somewhat familiar with market profile, right, is you got all this sort of overlapping volumes or value. So you just do like merge with prior profile, boom, overlapping, merge with prior profile, right, overlapping, merge with prior, right? And so I like to look at things like this, like, this is now almost a monthly GPO, right? Like this one, merge it with the last one to get an idea of what it looks like here. And it's useful to note that we, came down here and whoosh, rejected really quickly all through this whole, I mean, they bought it so fast through this, and now shorts are just, shorts are very, very trapped out of this box. I mean, they're very trapped. And if you guys remember what, like CNN fear and greed indicator was like extreme fear down here, 24 readings, right? So if you follow that every day, you know that like as a metric, as a standalone metric, it's not very good, but if you kind of follow the sentiment every day, it can be kind of useful. So anyway, merge with prior, right? So now you lose the fact that next week we shot straight through here, but now we're getting an idea of what time and volume look like, or what it looks like underneath us, right? So this is a multi-week high volume edge here, right? So maybe you come in here, you put this ray on, you see how these tool configuration buttons have different colors? Well, that affects the color of the rays. Every single thing that I may want to draw on the weekly, and note that it's a weekly, has been configured in here. So again, TD1, right, is tool configuration for the day, and then this is a TW2. Actually, could be TW1. It should be TW1, but whatever. I misnamed it TW2. But it could be TW1 because it's the only one for the weekly. But is what it is. So anyway, I've selected this array. Go to TW2, and then I can go up here and go, hey, that's a high volume edge. What, from right here? So maybe 4709 will be significant. And so let's see. We don't know what that is when we're looking at the low time frame chart. We know it's something from the weekly, so maybe we just call it HVE, high volume edge. Check it out. Done. So that's all it is. Right? Maybe this is now unimportant, or is it? Maybe it is important. Here, let's go back. Right. So anyway, if you want to now undo all the profiles, right, we would just do undo all merges in this profile. We can reset the TPO chart back to normal. Ah, okay. What was that? Some area that I thought was important. Hey, look, it's a high time edge. Look, that's what it is. So maybe we just call it, maybe I didn't finish my work, HTE, high time edge, right? There you go. Is that important? Maybe. So there's a time point of control here. There's a little bit of a volume edge here, right? There's singles on the weekly down to this area. So if we did get down here, yeah, we could call it maybe a false breakout, but it'd probably have a pretty good reaction because of all the shorts that are underwater from all this aggressive buying. So a violation of this area probably gets all the longs bailing, and then we come into singles, and then maybe boop, we bounce here. So look for it on an entry. This might yield you 20 points. This might yield you 10 points as far as a bounce goes, because it's what? Based on a higher time frame. Jack, it's not. It's not going to be saved at all. I doxed myself early in the video, and I planned for this to be sort of like an impromptu thing. So yeah, not saved to YouTube or anything like that. Do you really want this? Do you really want this video going out into the YouTube space? If you guys took notes and or even understood on this video, the less people that see it, the less are going to try to replicate some of these things, right? You guys saw a bunch of the different charts I use. The wiser among you may have figured out some things that I didn't talk about that are drawn into my charts. They do give a lot of edge, which is why I don't share a lot of that stuff, because markets are always, especially with futures, some of the strategies for scalping, they're changing a lot. If you don't believe me, that's fine. Anyway, I think there's no more questions or anything like that. I think I'm gonna log off here. I am curious what you guys think about this new Sierra chart, direct CME routing. Are a lot of you comfortable with it? Do you want to switch? Does it matter for your strategy? If you're day trading micros and you have a small account, is it useful to you that it's going to be essentially 20 cents per round trip cheaper than CQG? Does that matter? Hey, thanks for hanging out, William Ross Trades. I appreciate it. So I'm curious, because without the 10 cents per side, Sierra chart is not going to charge any routing fees like CQG does, for example. So CQG charges 10 cents for every transaction. Doesn't matter if it's an MES or it's an ES or a mini or a micro. So that's pretty significant, right? Instead of what 40, what is the micro? 47 cents a side. It's 37 cents a side. Oh, interesting, Jack. Do you notice that it's a little bit it's a little faster? Because I used to route with the Sierra chart's old one. I call it Trading Technologies routing, but it's the old Sierra chart TT fix. And I noticed that was extremely fast compared to the routing with CQG. Yeah, the TT fix with stage 5. But Sierra chart's going away from that. I was with AMP, and then AMP discontinued it because of all the problems that happened with it one time or something. And I think their egos is what makes their software good sometimes, is that they have such a drive to try and improve their software, so that's good. But then it also comes with them being rash at times and improving the software and making strides with it at the expense of things working perfectly on the first try, right? So they're kind of like mad scientists in a way. They're moving things forward. It's kind of in some ways cutting edge, but then that on the flip side, when you kind of consider for risk management, that's probably not a good combination, right? Because you don't want them to be rash when it comes to risk management, right? So we saw users already have some issues, and Sierra chart just completely distanced themselves from any kind of responsibility, like without even understanding what the guy said. And that is what concerns me, is that they're so quick to say, it's not our fault. We didn't do anything wrong. I wouldn't be an early adopter. Again, they're driven enough as long as their users provide feedback about teams. See, here's the problem with Sierra chart, is that every user that provides feedback is excoriated. They're whipped, essentially, verbally by Sierra chart. And so the users that are having problems with the Teton, and I know a few users that are using it and they're having issues, those users refuse to give Sierra chart any feedback, only because they're so rude. And so what they're doing is they're leaving the service rather than giving Sierra chart any feedback, because when they have given any kind of feedback, Sierra chart is so rude about it and so dismissive. And so Sierra chart says, hey, give us feedback, but then when people give feedback, they're sort of verbally whipped. So they're shooting themselves in the foot. So it's just, it might take a lot longer for the whole thing to actually get up and rolling with a whole bunch of users. And that's if they've been rude to, say, some of the brokers that did implement some of their prior routing setups, like AMP and, say, TT fix. If they were really bad in their communication with AMP may be like, there has to be no problems at all with the Sierra chart routing service, like no hiccups, and it has to have a good track record before we'll even touch it. Because if we're going to provide feedback and actually have discourse with Sierra chart, I'm sure they're the same way with their FCM quote unquote partners, which so I'm sure they treat them all the same way. And so they're just hurting themselves by being so rude, right? They have no general business sense. But going back to Sierra chart and their Teton routing, I mean, it's the right thing for them to do, is to create something like that. It's just sort of rashness and quick finger pointing. Stuff like that doesn't belong with risk management. And so that's where a lot of people are like, if if they do make a mistake or something, because they've complained at length about, oh, how complex CME routing is, and I'm sure it is compared to, say, FairX or something like that. But they've complained at length about how complex it is, and God forbid something actually happens where it's their fault. Do you think they're going to admit it? They have to not be culpable, otherwise, I think that they potentially go out of business or something like that. It's a very unique group of people there. But why stick with Sierra Chart right now? Because they are the best software for money out there, and I definitely have the most options with my charting. One of the things is that if the Sierra Chart team is a very small team, and there's one or whatever, two really dominant coders that have been coding it since the beginning, there is a huge advantage to knowing the ins and outs of that software and not having a very large team coding. So they can get an extraordinary amount done in a short amount of time if they know the software in and out and don't have a very large team. And I think that's why you see some of the updates, they happen so fast, and that's a good thing, right? So it's not all negative about Sierra Chart. It's just maybe their business personalities are not good. It turns a lot of clients off, potential clients. Yeah, Christopher, that's exactly it. And I think I made a YouTube video, and I said the single greatest Sierra Chart tip was that. Click on the description button and read about the study that you're actually using, rather than making guesses about it, right? I mean, you could get in here to, I don't know, the TPO, you go into the settings, you click on description. Boom. Yeah, I can't. It brings up the page about that study. I'm not going to, trading is hard. But you know what? I think that with trading, we're told that it's so easy by so many people selling stuff, and I don't think that's true. If it were so easy, then, we'd have a lot more people being profitable day trading. And the fact of the matter is that a lot of people do not make money day trading futures. That's just what it is. It takes a lot of context, and you have to be able to process all of that quickly and do it well. And then, there's the whole psychological aspect of trading as well. It's not like a normal job where you go to work and you get paid no matter what. With trading, it's all on you. And it's very, you're either profitable or you're not. At the end of the day, you can make a million excuses with trading, but you're either profitable or you're not. That's just, I think, a lot of other things in life, you can BS your way out of it, but with trading, it's math. It's you either produce or you don't. It's all good, B4D Trader. Thank you for that comment. Yeah, Ticino. So I have a sort of a rule that we don't promote vendors on the Discord, but I will promote Ticino all day long. I mean, I learned mainly from buying some of his chart books and just seeing what could be done, sort of how he built various things and how he made the charts talk to each other, right? Yeah. Well, you have to tell yourself how to use your knowledge. Just backtesting. Trading is hard. Trading is hard. Not everybody's going to win. It's just how it is. But with Ticino, I'm totally cool with promoting his. So he gets a free pass. And he doesn't promote himself or anything. He'll only if I comment in the Discord and tag him or something, he'll only yeah, okay, I do have that chart or whatever. He doesn't go out of his way to promote himself. He kind of understands the whole thing. But to me, he's the OG. He's the one that made it possible for a huge number of people that are now selling chart books, right? Him and Atkins Indicator, Zip, essentially, same person. What they're able to do with Sierra Chart has made it possible for a lot of people to do what they're doing. And so, you gotta respect. And Ticino's, the prices on his chart books are just so ridiculously cheap. When I first subscribed to his chart books, this was, I don't even know how long it's been, but it was maybe almost 2 years ago, right? Is when I started using Sierra Chart. I couldn't believe how cheap it was. It was something like $4 or $5 or $6 then. And even if it's $20, I was like, I would have paid $50 for access every month to his chart books, because he just gives you all these chart books. It's ridiculously cheap, especially for someone who doesn't know how to put all that together. I mean, it's crazy. So well priced. So on this level here, 25,000 contracts transacted in 30 seconds, 2 closes ago. So this is today's close. It had 27,633 contracts transact from here to here. But for this light pink one, there was only 25,905 contracts. But that is a lot of contracts transacting in 30 seconds. Not to mention the settlement, the cash settlement for the contracts that were entered long or short before then, is based on that price, that settlement price. So it's interesting. These places hold a lot of interest. Anyway, I'm going to clean all these charts up. Whatever explanations I was doing earlier. When I put the large volume trade indicator on, so I have this stream deck that shows me like my PC performance. It's very low. It's like utilizing only like 4%. But when I put the large volume trade indicator on, within Sierra chart, the chart lags tremendously. Look at this. So I move it, boom. See that? Huge lag. So if I turn the LVTI or large volume trade indicator off, watch the difference. So it's a poorly written, it's a study that takes a lot of juice. See that? Perfect movement, right? When you drag it around. So that study is, it slows Sierra chart down a lot, which is why a lot of the times I don't have it up. But if I want to look at some structure, I'll turn it on real quick, right? Just find it, apply it, okay, and then hide it again. It's a performance, not the actual PC. It doesn't slow the PC down. It's a within Sierra chart thing. So, oh, it says 0. B4D trader, where's the hook? I like your honesty. There's no hook, man. You know what? You know how I get benefit is I have attracted some good traders to my inner group, and we all give to each other, and that's my benefit. To be honest, that's it. So there is a hook, and that my benefit is that I am able to surround myself with good people, good traders, and that does help me to stay sharp. So yes, there is benefit to me. This is not just all charity, essentially. And I enjoy the YouTube. Like I like talking to people. So like me just talking about the market here. Although I don't want to do it every day, I don't have time to do it. I haven't done this for what, 4 or 5 months at least, maybe more. 6 months is my last like live stream. It spices things up for me. So I'm sharing all this stuff because I honestly I don't, even though I think about all these things every day, I don't think about them in simplistic, sort of explanatory terms. I think of everything in sort of just like a flash, where you're just like, I recognize this. Oh, I know what's supposed to happen. But I'm not super systematic in my thinking where I talk, my inner discourse is not like how I talk to you guys. It's totally different. So that's useful. It's useful to go out and push yourself to try and explain things, right? Keeps your brain young. Yeah, Christopher, it's been, like I said, I'm because I've attracted some good traders. I'm mainly talking in Discord in a private group with them on a daily basis. So they're all people who put out like I do, right? I share charts, they share charts. We get on the mic, they're noticing something where I'm missing something. I'm noticing something where they're missing something. And I like the way that they think and approach. I like how they approach the markets. And so I truly get a big benefit from some of those people. And it's a process. We'll bring people into that small group that seem to have the right attitude and play well with others. And some people, they can't sustain that level of, I guess, interplay with other traders on a daily basis. They can't handle it. And so they burn out. And so, our contributors has gotten more and more selective. But at the same time, the people that are sharing there are willing to share more and more of their edges because they trust the people that are in there. So now we've been trading, a lot of us have been trading with the same people for like, I don't know, six months or something, or 7 months in the Discord. And so it's really beneficial because you get to know people, and all the people that are in there, again, they're a lot of them are I don't know, they make me better, right? Because they're just as passionate about trading as I am. And honestly, we have some people there that have been trading 25 plus years in the markets, some 30. And so the amount of experience we have among about 10 people was like, I calculated it the other day, was something like 140 years of market experience. So, that for me is extremely beneficial because there's guys in there that trade options really well. And then there's guys in there that trade shit stocks very well and have been doing it for a long time. And then there's guys that trade like NASDAQ futures pretty well. Notice I did say very well, pretty well. And there's people that trade just different things. And when you've been trading for 25 years and you've seen a few different market cycles, having those people around you, it's invaluable. All right, Steven, take care, buddy. I'm from California. I originally grew up in Oregon. Where are you from, B4D trader? I don't want to say bad trader. Yeah, so Grigor Tesnier. Lucky Prod, what's cracking, man? I'm just about to get off and go hang out with my fam. But so George, hey Brian Davila, thanks, I appreciate it. This is my color scheme. I'm sticking with it now. I'm sticking with it. I've even made buttons associated with this color scheme, so I've got to stick with it. I've spent far too much changing my color scheme up, and it just wastes time. I'd rather go read a book or something. So lots of trading books that I still have. I've bought and I've yet to read. So just trying to spend less time tinkering in Sierra chart and more time learning. But so I do watch CL, and with CL, so this is CL. We'll expand it out here real quick. So this is CL. I like to watch settlement, right? So here's yesterday's settlement. Here's today's settlement. And you see this pink line here? That is a high value, it's value area low and also an HVN from 1114, right? So looking back into November. So I like to, and that comes from a TPO chart, right? So if we expand, look at all of this again, you can see how, right, it was reactive to that in that it came up and has sort of held that area right here. And now we're distributing or something up here with oil. So I do use, so here's the weekly TPO, and I'll expand this one right there, right? See that? Oops. Right, so you can see that this was sort of created from here, right? And but yeah, anyway, I do use TPO to generate various levels, and honestly, I've been more focused this week on just the Nasdaq. Honestly, this like all week, all I've done for the most part is trade NQ. I know early in the stream I traded the ES on a sim, but all week I've traded Nasdaq because it's been the more interesting of the two. So I haven't focused on oil this week, nor have I focused on gold. So, and a lot of my levels, just yesterday I took off with oil because into this area we had the COVID breakdown, right? So oil broke down when we had the Omicron variant announced from whatever it was. So all those notes are now gone. I removed them because we had reactions off them, and then now we're sort of above that area. So they're pretty bare, but I'll use that. I'll use daily. Here, let's expand it out. So here's the daily charts. So I'll do that. You can see. Okay. Right, so I've got some little notes in here, and it's not really that comprehensive, but so I'll use this type of chart, and then for oil, I like a little bit of a higher time frame on my footprint chart. It's what works, I found. So here's oil. And again, I got settlement in there, right? So I use a 15-minute chart with oil, right? So you can see that on the 15, right, you have these volume nodes, and right, you can kind of look into the candlesticks a little bit more to see what's going on. And levels are overlaid, right? You can see we reacted just before this daily. I call it highly resistive based on daily structure level, right? And so if we go over here to oil, right, it's this area. It's for oil. Let's see here. I would say that this is let's see. This area is highly resistive. Oops. Come on. There you go. Right there. It goes. Accidentally went this way. So just an area where we pull back. Longs probably, so initially, right, it's useful to put, like, if we were on the right edge of the chart here, where would the trend line be drawn, right? So, okay. So that's what I'm doing. So we'll just say, I don't know, TD2. This trend line would have been drawn something like this, right? And so, here, we'll get rid of this one. And so, if we were right here, price would have came up, longs would have got aggressive because of this trend line break, right? We could put, let's see, we could say that this was a short-term channel, right? And then, oh, price broke up, and then longs got a little crazy. And so here we are in this area, just based on the daily structure. We're coming back to it. We're starting to see resistance because longs were trapped above this trend line. And so now obviously there's always bigger players that will hold underwater and add and stuff as well because of a fundamentally bullish thesis or whatever. And just like little guys, the big guys will also want to get out around break even as well. And so then there will be other forces in the market trying to trap them. So, big games and little games, big guys are wrong too. So yeah, coming up into this area, pulling back off of the area, and that's what determines. So I made this a really tight little area based off of the daily, but you can see, right, we came off, and we came off in a hurry off that general area. Whoosh. And now we've come back and retraced, I don't know, 50% of that down move or so, right? I think that's about right. Yeah, it's about right. From here to here, it's about 50% in this area. So the market's deciding, right? Settlement was about 50% of swing high to swing low from here to here, right? So, yeah, I mean, most volume right in this area now. And so I'll use a bunch of different things to kind of trade oil. Trade it, hopefully well. Oil was, a few weeks ago, was my best performing futures. Like, just in terms of, risk reward, win rate, everything. It was moving so nicely. But what happens is in a strong bull market, you get these crazy bounces, right? And even on smaller time frames, it starts to become a little predictive. And then once you kind of come into these areas after a big sell-off and you go sideways like this, it gets a lot more difficult because like this move here, yeah, I mean, you could say it bounced off the consolidative zone, sort of rejected off of this low volume area. But it's a lot harder to trade this kind of chop with this kind of structure because overall, right, we had this nice little trend line, right? We came up here, tapped this, tried to go higher, rejected, came all the way through the bottom of this trend line. It's tough when you're trading something that has done this, right? And chopped people up around this trend line. It came in, broke the trend line, chopped up all the shorts back through the trend line, came back through it, and now we're what? We're kind of trend up, right? We have this low, higher low. Now we have a higher high, so we're trend up now, right? So, now we have this resistance, maybe a pullback. This would be likely some area of support here, potentially on the daily, right? But you know how oil moves, right? So then maybe you expect something like this. Now, big volume node in this area, right? So expect more chop in there. But for the day trader, man, if you're not aware of this, you get some big moves out of oil that you're like, what? And then you get, of course, your EIA and all those other reports you have to kind of keep in mind too. When do those reports come out? Sometimes news will really affect oil. But yeah, if you're playing technicals, this would be probably, this is the way I play it. And it takes me a long time. When I'm doing my homework on the weekend, it'll take me to get through these 4 charts like 2 hours. And to look at every chart, tie them all together. So typically my best trading days of the week are Monday or Tuesday. Because all my levels I've spent so much time. And if I don't find time after the market closes between 2 and 3 o'clock, sometimes, life happens. I've got a kid, I've got a pregnant wife, blah, blah, blah. So some days you just don't get to it. If I don't have enough time to properly spend on markets, the rest of my week typically doesn't pan out as well. But Monday, Tuesdays typically are very good for me because I have all these different scenarios drawn out and mapped out in my head. And then, as you guys know, if you've watched my channel for any amount of time, I chart the top. Typically, I do the NASDAQ 100 and the S&P 100 if I can. And so every single week I look at all these high market cap names in Thinkorswim and I chart them all out. And after you do that for months and months and months every single week, you start to get an idea of all the constituents that move the S&P 100, and you start to get a very good idea of what's about to break out, what's in a consolidating range. And if you get, say, all of the chip makers look really, really good, then you start to think okay, well, the chip makers are likely all about to break out. That'll probably affect some higher market cap names, right? You might now Tesla's, in a pullback phase, but it's nearing its gap. So Tesla may bounce next week. That'll raise the tide. Apple is consolidating. Everyone's getting bearish on the markets, but Apple looks good, right? So you start to get all these things mixing around in your head, but because you've juggled them for so long and you put the work in on weekends and put so much effort into it, it becomes easier and easier. Kind of like the settings of Sierra chart, right? 10,000 settings in Sierra chart, and you're never going to know it all, but you can get a lot more comfortable with navigating it all, right? And so the more time you put in, the more you can juggle things in your head and kind of give yourself your own sentiment about the market, right? It's not that I remember every single chart, but if you guys have watched my videos, I'll typically go back and look at the top 10 market cap names of the S&P 100 or 500 and the NASDAQ, and I'll be like bullish, bearish, neutral, bearish, bearish, bullish, bullish. And then I have them all sorted by market cap every single week when I go over them. And so, I'm keeping in mind, the first 6 out of 8 were all bullish looking setups. And when I say bullish, not at all-time highs, not already broken out. I'm talking about they're in a consolidated phase with a very bullish potential for explosion to the upside. Meanwhile, say the equity indexes have pulled back on volume. And what do we know? Smart players buy on big volume at lows. That's just how it works. So I start marrying those things together and I go, all of these things are consolidating while the indexes are pulling back. So, everybody's bearish. Fear and greed is low. I'm looking at credit spreads. Oh, very good, right? Watching the news and how people are reacting to, Omicron and things like that, and realizing, wait a second, is stay at home or some of these things potentially bullish for a lot of tech? Yeah, maybe it is, right? So it's a huge mixture of things, and all the while I'm still playing technicals. So I separated in my mind the sentiment from the technicals, and the fundamentals I don't think I'm good enough at, right? It's too difficult for me. And then, of course, I'm looking at volume, trying to go, hey, big money bought, right? Big money bought because we sold off on volume. And now we're rising on lower volume. This is the way markets work. They sell off on volume and they rise on low volume. So I marry that all together, and then it really does help me to form a pretty accurate perspective of the market. The problem is, for me, I typically will get somewhere near the low on a higher time frame. I'm really good at fading the crowd, and I usually catch like 30% or 40% of the move, and that's it. I'll do it with spy calls, and I'll only catch. So a lot of times I've caught tops, and in this market, so I'm a lot less likely to sell short in the market, a bull market. But there are times where I'll give it a shot just because it's so overextended and it goes sideways, and options are cheap because there's no volatility. And so I'll buy like 3 to 6 weeks dated puts, and usually like a spread or something, and I'll give it a shot, right? And a lot of times I'm pretty good on that just because I'm good at fading sentiment at extremes. But what ends up happening is I catch like, say I bought options for, I don't know, $200 a piece or something, spreads that are dated out that far. I sell at like 3.5 or something, or $3 per, and those things go to like 11, 12, $13. So I'm always selling too early because my location is often very good, and people will back that up from within our contributors group. My locations are usually phenomenal, but I'm usually selling too early, and it's a difficult thing because I've long said, I want to have better reward, and I've tried that, but what ends up happening is if I carte blanche across the board, add for most of my trades, if I don't differentiate between, hey, this is a potential higher time frame bounce and a shorter time frame bounce kind of area, I hold the trades that are only supposed to be short term, and I start mixing in, oh, well, I want to get better reward, and then the trade comes back to break even or even stops me out for the full stop while having traveled 1 Rs into profit, right? And so that's that whole thing. That's that whole dichotomy of bigger risk reward, lower probability of success, right? And so categorizing or filtering out the type of setups is extremely important, and that's why I do the higher time frame analysis. Is because if I see like a big thick blue line on my chart, I know it comes from a daily TPO, versus like a big thick pink line, I know it comes from my weekly TPO. That's a big level. So I have to know in that moment that I'm looking for a higher risk reward trade, and that's why I do it that way, is to try to distinguish between intraday analysis and a much higher time frame analysis where I can get bigger risk reward. And of course, I have to lower my size on those areas that I'm playing a bigger move on, because typically I'll widen out my stop there. But every once in a while, you'll get a really nice setup short on an intraday time frame, right? Where the footprint is like, oh yeah, there's ice, everyone capitulated underneath it, lots of travel, boom, comes right into the weekly level, and then you can go in on big size. You can scale out and then let the position run. But in that moment, catching that and knowing what's going on and not being distracted by stupid chat or chatter or someone talking to you on Discord, all of those things complicate it all, right? And so you really have to be on your game to play that way. But that is, for me, the holy grail is like, yeah, trade with a fairly high win rate, almost 1 R, intraday, because you can win a lot of the time that way. But then recognize that when you're in a position intraday, that there are some positions you should be letting the position run because it's on a higher time frame. It's likely that it's going to bounce much further, right? And so that's tricky too, because sometimes the accumulation on a higher time frame takes longer. So you may have to hold through the close, right? You may have to, you may be dealing with margin issues, right? Even intraday, you may have to hold for 2 hours as they accumulate at the bottom in a range, right? And everybody and their mother, all your trading buddies are all like, this is a big bear flag, it's going to break down, right? You get a few false breakdowns, blah, 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 blah. And so holding those types of trades can often be problematic as well because it takes longer. And then the next question becomes, should you just get out of the trade for 1.5 Rs or 2 Rs, right? Because it had a healthy bounce, and then try to turn your edge over faster intraday if you're really good at that, right? So, and then there's boredom. Like, I'm still in this trade. Do you add on lows and then sell every pop? Try to lower your baseline? I try to do that too. But inevitably, you get a little MAE on those positions, and then you cut them, right? And then intraday, if you're trading on size, you still have the problem of, okay, now you're adding a few losses to this position you're trying to build for a bigger move. Dude, like I say, trading is hard. Trading is hard. Oh, cool. Lucky Prod says they're missing here moving. Hope you and the missus, and I think you have a kid, Lucky. Hope you guys are all doing well. I'm finally reading the chat here. United Kingdom. Yeah, thanks for dropping by, Michael. I don't know how to say your last name. Puet? I don't know. Sorry. So my daily TPO is I'll just show you. 6 a.m. Pacific Standard Time, or 9 a.m. Eastern to 11:30 Pacific Standard Time. So I am using the regular trading hours. So I talked about a lot of other stuff, Gregor, before getting back to this, but so that's how I do it. So there you go. Gold, 5:20 to 10:30, and that way, if let's go back to oil here. If I turn on, so this is a sun and a moon, RTH, I know what I'm looking at exactly. So there you go. I am curious what session times some of you guys may use for equity indexes. I know for me, with the E-mini, these are my chart session times. Right? So 6:30, which is normal, and then I end it at 1 p.m. and then my evening session starts right after the cash close. I would imagine some of you are still using 6:30 to 13:15 or 16:15, something like that. Or some of you are using 6:30 to essentially the 5 p.m. Eastern close for an hour, something like that. It's fine. Whatever works. End at 4:51. End at 4:51. You must meet 4:59:59. Oh, 4:15. Oh, interesting. Yeah, that's the old. So settlement used to be 4:15. It's not. Settlement is now the last 30 seconds of the cash session, and that's why a lot of these charts are still set to standard 4:15. So I just ended at essentially the cash session or settlement. So I just do all my charts that way. It's for me. I'm able to see the rotations. So this is a key piece of information. I'm able to see rotations around settlement. Yeah, and so most of the education that exists out there ends at 15 after, and a lot of the theories are based around settlement and stuff like that, but settlement is now different. So people are just still stuck on using that time, and now it's kind of like Fibonacci or something. They're like, well, I'm going to use that because everybody else is using that. And so there's a little bit of confluence and effect because a lot of people are using the same chart. But if you're a little, more proactive in your thinking and understanding what it was based off and realizing that currently it's based on something else, you can define a little more edge in that. And that I know for sure. All right, so here's oil. Look at settlements. So these purple lines are all settlements projecting out from here. Look at the way it reacts, right? Settlement. See how it's, right? And it breaks it, whoosh, big upside. What's the pullback? Settlement, right? Pullback, settlement, right? So here's settlement, big dip, up to settlement, pullback, above settlement, pulls back to settlement, defended, and then it's gone, right? Settlement, right here, settlement. Let's go do the same thing on the E-mini. All right, so remember purple, settlement, so settlement, overnight. So this is the close, this purple, the teal is the open, right? You can see opening VWAP at 30 seconds, T+1, or settlement is purple. So that's that purple line extending out. It turns into T+2 the following day. So this becomes T+2. Okay, so anyway, here, settlement, boom, bounce. So settlement, broke settlement, liquidation. Came up before settlement, no. Settlement to the tick, pullback. Once it breaks it, pull back here. Oops. Here we use this thing here. All right. Let's go grab this. What were we looking at, right? So this area here. Pull up to settlement, big pullback. Above settlement, settlement defended. Up, above, came back. Oh, to the tick, settlement. Right, everybody's using all these other levels. What do you think matters on a cash settled equity index? When people are holding thousands of contracts past settlement and their payout is based on settlement for their nightly settlement profit or loss. You think they're going to try to defend that level? Michael, I don't do live streams on YouTube anymore, even though I'm doing one here. I'm on Discord, man, with a bunch of private guys that we all just trade together. Essentially people who understand the ethos of give and take in good faith, right? And so I've been fortunate enough to meet some people that understand that and share the same ethos. And so we're ethos, and so we trade together every day, and we do it mainly in a private part of Discord. But the Discord has lots of other public areas, and once in a while, once or twice a week, I'll go into the public areas and hang out and hopefully meet some new people and see if some of those people in there are willing to put out a little bit. And because it's all laid out in the server rules, right? What it's all about is all clearly laid out. And so if you want to trade with experienced people, you have to put out and show that you're passionate about markets, and that you have sort of the motor, the devotion every day to spend time, or even multiple times per week if that's where you're at. Are you the type of person that plays well socially with others? Is that your thing? Because a lot of traders are just solo artists, and I get that. I was like that for a long time too, but I've noticed that I do a lot better when I'm held accountable towards other traders. So anyway, look, settlement came down. Settlement violation. Whoosh. Wyckoff spring right there. Look, well, how's that a Wyckoff spring, you say? Well, let's look. Trend line, level, whoosh, breaks it, breaks trend line, off to the races. Beautiful setup. I've gone over that a gazillion times, maybe with contributors, I don't know. So anyway, down, settlement, up, finally coming again to settlement, 1, 2, 3, fourth time, liquidate everybody under settlement, right? Back up, oh, hey, settlement, back off, oh, another one, settlement, right? 1, 2, 3 times, fourth time, liquidate everybody. Here's the highest volume area of the day off the open, rejects there. I mean, why is that painted, auto-painted on my chart? Because I like to think about the markets in ways that everybody else is not teaching. What matters? Volume, time, and aggression. So find those levels on charts. Don't just copy me. Go what works for what you're doing. Anyway, so here's settlement. Foop, foop. 1, 2, 3, third time break settlement, comes back up, down. Oh, what? Reactive around settlement. Tries to break. Nope. Settlement. Back in. Little inverted head and shoulders there. Trading back to settlement. That's where we're at. T+2. Right? 2 days ago settlement now. Right? This is the end of today's cash session. We're right on settlement. Why did we bounce today? Off this area. Why are we consolidating right here, right now, off this level? Settlement. Anyway. Why did the NASDAQ struggle above this level? Did you know the highest volume area for the NASDAQ is right here, off the open? So today's opening, 3,200 contracts traded here for VWAP here. This is the volume weighted average price off the open. You know that the close right here. So this is shaded according to time. Okay, see that? And so this is a volume 500 volume chart. So you can quickly see that this volume at the open is approximately equivalent to the volume at the close, but it's not quite as wide. So the highest volume for the NASDAQ is transacted where? Open. Why is it a level? Yeah, it breaks it a little bit, but it's relevant. Anyway, settlement for the NASDAQ. Oh, do the tick. Shoo, back down. Right? Gets a little jiggy around settlement. Finally breaks off of it. Settlement again. Pushes off a little bit. Now here's today's today's close. Settlement close. It's volume weighted average price of the last 30 seconds. So VWAP of very short time frames is extraordinarily useful. VWAP of the last 24 hours, not so great. But these levels make a lot more sense. Why? Because it tells you right away, concentrated volume. So what do you think is going to be happening around concentrated volume? Reactions. As a traders, that's all we want. We want to know where the market's going to react, as a counter trend move or a breakout. Let's see. So anyway, look here, settlement. Right, here's the open. This is the NASDAQ, remember? Right, you see how as we come, we're trading in and around it. Right here, it taps it. Here, it slows down, but it moves through it. Here, it definitely slows here, goes sideways a bit, bounces, comes back through, then starts to slowly what? Make, so there's clues, lower highs. But right around then, it just rejects settlement. And like, this is all hindsight trading. Okay, put it on your chart and give it a shot, okay? This is called backtesting. This is not hindsight trading, so give it a shot. Anyway, settlement, T+2, look, overnight. Where does it stop? T+2. If you don't know about T+2, go read about it. Go read about why T+2 matters for stocks and equities, and then recognize you're trading an equity index that represents a basket of those underlying stocks where T+2 matters. T+2 is settlement of the cash that results from own shares. So go read about it. It will be worth your time, I promise you. And I've been talking about this stuff all last year. The sharp people realized it made a lot of sense. The dum-dums who didn't want to spend time and read about it, they still don't know. So this is real edge in these markets, and it pertains to the flow of actual tradable funds that translates to margin and how the large players need to hedge off those underlyings. So it will matter, just like options matter. You guys are like, what? Options don't matter. Yes, they do. Go look at all the strike prices and where we typically reject. It's at the strike prices. That's where, you see those big orders in the E-mini for like 1,200, and they just sit on the book. Why do you think they sit there? Because that is a market maker likely hedging off their position because they sold, say, I don't know, a bunch of puts, right? And if the market moves a certain direction on the bid or the ask, based on where their deltas are, they have to hedge. But putting those orders on the book means that they're kind of defending their position, aren't they? Everybody sees it like, oh, well, big player. But then go look at the options strike. If the options have 200% volume on that for the day, well, guess what? That's a market maker that they have to be long or short at that strike to hedge off their deltas because they're making money in a perfect world off of the option decay, right?
gamma, theta, all these extrinsic value type things, right? So they're going to sit there, and if it pushes off that level and they don't ever fill, well, then the options decay and they're happy. If it fills, okay, well, they're neutral now. They're delta neutral. They don't care, which is why they'll buy and sell at that level all day long, which is why you get some days where if it's options expiration, right? Let's look back, right? What was it? The third Friday of every month. So what was option expiration? Let's see. No, those aren't manual drawing. They're automatically made. I have a video on CL settlement, how to draw it, or how to create the how to automatically draw those lines for oil. So the same thing applies for equities. But you'll see around these levels, huge market sweeps. Oh God, I can't remember what day it was. I think it might have been 17th. Okay, I should have done that faster. But bear with me, guys. I haven't eaten lunch and it's 4 o'clock. So does this chart even go back? Nope. I think I have to load some more. Yeah, that's why I was struggling to get there. Like, why is it not moving forward? Okay, here we go. So what we had, settlement, quad witching, right? So we had quarterlies, options expiring, weeklies, and then monthly options all expiring, SPX, ES, all of it. So like rolling to a new contract as well. So quad witching, and that was on, what was it, the 7th? Where's this price here? Like, what are you talking about, dude? All right, here's what I'm talking about. Look at. All right, so this was 46.25, held some of the highest strikes on that day. You see how we move around that? Bing, get too close, get too far. They're hedging. Get too far away, straight up. So these moves were wild, right? So this is on what, Friday? But look at even the prior day. It's just crazy. I think it was another one was 46.50, I believe. Yeah, that was it. So we got these crazy moves around. I should probably throw on a large volume trade indicator as well. So even 2 days before. All right, so 46.25, right? You see that? That comes up. Bam. Look at that. Comes up. They just sold through. So you got to remember, these are 1,000 volume charts. Okay. And so, oops. Right here, I geek out on this stuff. Oh, shoot. That's not good. Yeah. Yeah, right here. Let's see if it'll work this time. Come on, see your chart. There. That's better. Much better. You got to realize, okay, 46.25, right? As we get close to it, this is 46.25 right there. So 46.25. As we got close, every time we get close, you get this. This is a 1,000 volume bar. So that bar happened in like a few seconds. See, whoosh, whoosh, whoosh. They're just ripping. They're shredding whole levels of the book. Why? Because they need to be delta neutral around huge option strikes. And so they will just, if it gets close, the algos turn on and just start selling to get delta neutral. And that's why you get these kind of moves around option expirations. But you can look intraday at those options and go, man, well, why is this such a level right here? Right up to here, right here, right here. Technical traders go, oh, it's just support and resistance. Why? The question is why? And can you get a little more edge by looking at things that tell you why before the structure actually happens? Huh? Yeah, that is a powerful statement that people don't really spend the time to understand, right? What's driving a lot of these markets? So sometimes with options, it's the cat is chasing its tail, and sometimes it's the other way around, right? Where the tail is chasing the cat, right? Are the options transacting the way that they are because the market is transacting on the underlyings, or are they hedging off, right? So why is one important at one time and not the other? So go look at option chains, right? Figure out a way to get that into your platform, right? Things like that. But anyway. Anyway, let's see. How many people are left? I might be talking to myself now. 9 people. Anyway, I think I'm going to go eat something. Finally. All right. Well, I'm done. I'm done with this. I'm going to go hang out with the fam. Return everything to where it was. Let's see. Way out here. Double click this. Oh, why is that not working? Okay, there you go. This is when you know I'm losing it. I can't even find stuff on my menu. Yeah, Michael. Eventually, yeah. Just put it on the list of things to look at. But I get it. I see. I'm building on a long time. I'm building on experience. And so for me, all this seems so simple. And I'm like, man, why don't people look at it? Why don't they talk about it? It's like, if you're trading this market, what are the things that matter at the end of the day? Volume, 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 right? Track volume. But people like to do the volume profiles. And that's just like, I don't know, man. That's like taking a picture of the rapids and not actually writing them, getting in there and like picking them apart. And like, do any of you go back and look at historically, what's the highest volume point of the day? Maybe that's an inflection point every day, right? Could that be important? Figure out a way to get your charting software to plot it for you every day. The highest volume print of the day, historically. It takes a little bit of scrolling in your chart, but go look at 30-second bars or 1-minute bars and go, huh, what happens around that time? And then afterward, if I go plot that point, every single day, is it reactive? Oh, if it is reactive every single day, like at some point, it's always reactive to that point. Figure out a way to put it on your chart automatically so you don't have to manually do it. And then start studying that. Maybe there's some edge there, just if even to scalp. But if you're scalping with big institutions, right, you can do it on more volume and have a tighter stop. And now all of a sudden, boom, you're getting a lot of edge out of something that maybe you're not taught by most people out there on the great interweb. Do you hear people talking about settlement all the time? No, they're all talking about my fancy handy dandy Orderflow thingamajigger. Oh, icebergs. Oh, that must be how you track institutions. Do you really think institutions are going to make it easy for you to follow their trail, their footprint? No. The CME recognized this 2 months after they allowed iceberg order types. Back in, I think it was August 2017. And they said, hey, for you institutions that don't want to be tracked in the market, right? Because with a native iceberg on the CME, the order ID never changes. And so if you are subscribed to MBO data through a data provider that gives you the full amount of information for that data feed, including IDs and all of that, then you can have an algorithm that compares order IDs, and then any subsequent order ID is now part of the same order, so it's an iceberg. So you get automatic iceberg detection and matching, which is what Bookmap partially uses, right? By the way, Sierra Chart's MBO data, they don't give us this access, right? Which I think is, I don't know, kind of silly that they don't, but they're worried about data. They're worried about congesting their server. It's a whole thing. They want to pay for extra servers, essentially, for more data. And so institutions who use this iceberg could be found out, because you get, after the second order that has a reveal, right, then that order ID already exists. Boom, you get an instant iceberg trigger. And if you have an algorithm, within milliseconds, you know that there's an iceberg there. You could front run that thing. And so what the CME data says, we'll do something for you guys. We'll call it synthetic icebergs, where we'll allow this to be hosted and integrated off of server, but we're going to support this order type. And essentially, an institution could have an off CME server where the next reveal of the iceberg generates a different unique order ID, and so you can't instantaneously track it. So how do you think a lot of these institutions buy with icebergs? They do it using synthetic, right? And so the bookmaps and everything else of the world, they don't even have, I would argue, they don't even have perfect detection for any of that, right? And so they're happening all over the place, which is why I say ultimately just use bid and ask imbalance, right? You're not going to ever know if it's an iceberg or what size it is. And a lot of these, if you have ever traded through TT, their order types are kind of like based on time and buying an area a lot of times, right? And so they'll buy areas if price comes back in through that area. The algos will turn on and start buying, goes back out of there, they'll turn off. And you see it when you do aggregated bid-ask delta volume profiles, right? And so if you do like a draw volume profile and you look at areas, you'll start to notice, oh, they're accumulating a certain area. And I saw it on these last lows, right? And I pointed it out to everybody in my Discord servers. It's not some after the fact Furu BS, and I'm not trying to be a Furu, but I'm just saying, like, it was noticeable. And I said, yeah, they're buying 45.20 to 45.40, and there's about 5,000 deltas that are being spread, that they're buying passively at that level throughout the day. And it was like 5,000 here, 5,000 there, 5,000 there. But the icebergs would turn on after price went above, came back below, and came back up through the level. And then when they come back and drop, icebergs would turn on. So if you're really watching the market, you start to notice these things. And if you have different methods of using volume profile and delta, you can actually measure and see it on a chart. It's quite beautiful to see. And so I already proposed at that time that they're accumulating, but they're doing it in a sneaky way. Well, I figured it out, but not everybody thinks that way about the markets, right? So anyway, go for lunch, Mike. I know, Lucky. So Michael, everything I learned from researching and reading a ton of documentation. So I read a lot of the documentation on the CME's website, and that's time consuming, and it is extraordinarily detailed, and it's not fun reading, but if you're curious, because I talk with curious traders all the time who are as curious, if not more curious than me, and so we get a little sometimes even competitive with each other, maybe not too overtly, but if someone doesn't know something, we're all hurriingly Googling it and trying to read up on, a PDF or something that the CME shares or something like that. So in terms of settlement, a good article was written just in general about it by Charles Schwab, and I think it was a female author. And so if you Google Charles Schwab and T+2 settlement and why it matters, that will probably be useful. And then the rest is logical deduction, and then observing over many years that your logical deduction actually makes actually makes sense. It might be Liz Ann Saunders or Liz Ann Saunders. I don't know. You'll find it. Or you'll find other things. Maybe you'll find the Investopedia, but a lot of it's just once you understand it, and then think about how it applies to futures, and then think about, yeah, just Google about T+2. You'll find something if you run across that Charles Schwab one that's good, and then start thinking about how it applies to how big firms hedge off with the most liquid futures in the world, the E-mini, right? And why these levels become important, right? And why when the market breaks these levels after a big move on volume, why they become even more important. And so it's actually how it's how I've actually traded a lot of market tops, is because I noticed that T+2 structure is favoring the bears. And so any breakdown out of that structure will result in massive hedging and or liquidation. So it is totally useful. All right, now I'm ending the channel. So have a really good New Year's, you guys, and good trading. Happy trading for the rest of the week. I hope you guys try and reach out with traders who are like mind. There's so much value in it, but I get not everybody's a full-time trader. But if you can connect with people that are not blowing smoke up your you-know-what, and that are just passionate people, I mean, you can tell the difference, right? I mean, between somebody who's trying to sell you something when they come to your door and between, somebody who is just trying to help you out, they look different, they act different. Do the same thing with trading groups. Try to find groups that are never trying to pitch you something, and then, try to connect with individuals that you share a like passion for in the markets, not a like strategy, a like passion. And then over time, share what you're doing with them, right? Have some intimate conversation with them, get to know people, question, let them know how you view the markets, and connect with people, because at the end of the day, you grow so much more by actually stating things about the market publicly and then testing your hypothesis. If you're always in your little bubble talking about the market, and you're probably going to be giving yourself excuses about why you still called it well, even though objectively you didn't. Maybe you're the type of person or the type of trader that you call stuff about the market and you have 3 outcomes. And so one of those outcomes almost always happens. But the question is, how did you actually trade that, right? So try to call the markets, be specific. A lot of times when we're in Discord, we have people who say, I'm entering long here, or I'm entering short here. Here's my justification. My stop is here, right? Well, so we trust each other. My stop is here. Most of us, almost all of us, don't take each other's trades because we're not built that way, right? We want to know why we're taking our own trade. But the reason they share that is because there's accountability there. And when they're publicly wrong, they try 3 times as hard or 10 times as hard to try and correct that public failure. And as traders, we already know that people are wrong all the time. It's just in most of the trading social world, it's taboo for a lot of people to really admit all their failures constantly. All the people that are selling you stuff are not talking about their losses. They're talking about how good it was, right? Or how good it is. By the way, they're trading your money, the money you give them to subscribe. They're trading risk-free money, by the way. So, find people that are willing to admit they're wrong, get to know people. And, if you're not the kind of person that plays well with others, well, I suggest learn to at least have accountability in some form, right? Don't lie to yourself about how you're trading, because that's a big problem for a lot of people. And it was a big problem for me for a long time, where I just thought, I'm actually doing just fine. And, you're not doing just fine. You have the occasional big loser that wipes out a week of gains because you're not playing the right way, and you're not telling anybody because you're too ashamed to tell anybody. Don't do that, right? Be honest. But anyway, I've got a lone wolf mentality. Yeah, Lawrence, I get it. Anyway. All right. Well, Ryan, I have a video. If you search my videos, it's one of the last few that I've made. It's something about, I don't remember what I called it. How to make T+2, or how to make CL settlements or something. Anyway, look, it's like one of the last 3 videos. You can just apply the same logic for the equity indexes, right? So if you're like, well, how is settlement calculated? Just go Google it, right? Just go look it up on the CME. And how is settlement calculated for the CME equity indexes? Google it. You'll find the procedure. Oh, it's VWAP of the last 30 seconds. And then apply the same logic you learned from the CL video. And then you're done. Really easy. Anyway, I just keep going. Have a splendid weekend. Take it easy, guys.